There is no limit to the maximum number of GL account groups, but there should be minimum two GL account groups. That is balance sheet accounts group and profit and loss accounts group. Means what? See here, there should be minimum two account groups. Means balance sheet accounts and profit loss accounts group. So all the GL accounts which are displayed in the balance sheet can be taken as one account group. Here I am using can be taken. It's not the principle or it's not mandatory. All the GL accounts displayed in the balance sheet can be taken as one account group, and all the GL accounts which are displayed in the P&L account can be taken as one account group. This is called similarity. What is the similarity? Being displayed in balance sheet and being displayed in P&L account. That is called similarity. Now coming to balance sheet account. If you take the balance sheet, you have two sides, liability side and asset side, right? In that case, if necessary and if the client requires, all the GL accounts which are displayed on the liability side of the balance sheet can be taken as one account group. And all the GL accounts which are displayed on the asset side of the balance sheet can be taken as another account group. Then coming to P&L account, we have the expenditure side and income side. So all the GL accounts displayed on the expenditure side of the P&L account can be taken as one account group, and all the GL accounts displayed on the income side of the P&L account can be taken as one account group. Otherwise, if the need arises or if the client requires, suppose if you take liabilities, on the liability side, how you have to classify your GL accounts? Classifying the GL accounts means under what headings you have to display your GL accounts on the liability side. For example, share capital. In that case, share capital can be created as one account group. Then, when you create the share capital as one account group, all the GL accounts relating to share capital are created under the share capital account group. Like what? Equity share capital account, preference share capital account, redeemable preference share capital account, irredeemable preference share capital account, then subscribed share capital, issued share capital, paid up share capital. Like that, all the GL accounts relating to share capital are created under the share capital account group. Clear? Then we can create reserves and surpluses as another account group. In that case, all the GL accounts relating to reserves are created under this account group, like general reserve, capital reserve, dividend equalization reserve, sinking fund reserve, revaluation reserve, dividend equalization reserve, investment reserve. So all the reserve related accounts are created under the reserves and surpluses account group. That's what I told you. The individual GL accounts are created under the respective account groups. Then accumulated depreciation can be taken as another account group. In that case, accumulated depreciation on plant and machinery, accumulated depreciation on furniture, accumulated depreciation on buildings. Like that, accumulated depreciation accounts on all the assets are created under this account group. Then secured loans. Secured loans can be created as one account group. In that case, debentures, term loans, and all the loans which are secured by the assets of the company are created under the secured loans. Then unsecured loans. The loans which are not secured by any assets of the company are called unsecured loans. And these unsecured loans accounts are created under the unsecured loans account group. For example, loans from the relatives of the directors, loans from the friends of the directors, loans from the directors themselves, etc. etc. Then current liabilities and provisions. So current liabilities and provisions can be taken as one account group. Like in that case, sundry creditors, expenses payable, then provision for different doubtful debts, then incomes received in advance. So all the GL accounts relating to current liabilities are created under this account group. Then coming to asset side, fixed assets. Fixed assets can be taken as one account group in that case. Then land account, buildings account, plant and machinery account, vehicles account. Like that, all the fixed assets accounts are created under that account group. Then current assets, loans and advances. So sundry debtors, stock accounts, work in progress account, finished goods stock account, raw material inventory accounts, then expenses paid in advance, incomes receivables, like that. All the GL accounts relating to current assets are created under this account group, like that. Then coming to expenditure side, raw material consumption can be one account group, personal cost can be one account group, manufacturing cost can be one account group, administration cost can be one account group, interest, depreciation. So you can have any number of account groups again. Then coming to income side, sales, other incomes, and increase or decrease of stocks. Like that, we can have any number of account groups. But how do we decide how many number of account groups you create? Always the best practice. Actually, we can say that it depends upon the client requirement. But sometimes we have to let us discuss. Anil, let us discuss. See, are you clear with the chart of account? Are you clear with the account groups? Okay, that's fine. Who will take the duty of the creation of GL accounts, right? We will discuss at the time of general ledger accounting, right? Because we will discuss everything at the relevant points. Now, tell me how many number of account groups you have to create. What I mean to say here is, first to concentrate, right? See, you might have worked with some of the transaction codes of the SAP, right? So forget about everything, whatever you know about SAP, forget about everything. Please be there in the class as if you don't know anything, right? Then only you will get something. When I'm explaining the account groups, it's only an advice I'm telling you. When I'm explaining the chart of account, account groups, if you're thinking about the GL master records, you are losing something in the account groups. It doesn't mean that you should not ask any doubts. What I mean to say is, you be along with me only. So you may be having some doubts in general ledger because already you have worked in the general ledger, you have taken the training somewhere. Like that, you may be having some this thing, right? But in my class, what I insist on every student is, what are the things you know in SAP, forget about them. Because nobody will give this much explanation. That is damn sure. And also, you are going to get a number of questions from this explanation only in the interviews. And please remember, it doesn't mean that you should not ask any doubts. You ask the doubts on the current topic. So when you can ask the doubts in the current topic, when you concentrate on the current topic, that is my way of explanation, right? That is the way of dealing with the class, right? Please remember, Anil, I never tell you that don't ask any doubts. You concentrate on the current topic, try to understand the current topic, then you come with the doubts with the current topic. We are going to cover very logically everything. And at the end of FI, right, I will show you the realistic P&L account and balance sheet. Yes. Now, in the real time, how do we decide how many number of GL accounts, how do we decide how many number of GL account groups we create? The best practice is to look into the balance sheet and the P&L account display requirements. Means how you have to classify your GL accounts on the liability side and asset side of the balance sheet, and on the income side and expenditure side of the balance sheet. Based on that, if you create that many number of account groups, at the time of preparing financial statements, the work of the consultant will become very easy. So that is the best practice. Speaking, right? We can create any number of account groups, but minimum there should be 2 account groups. And one more thing, there is no concept of main group and subgroup. There is no concept of main group and subgroup. Here, just to make you understand, I have started from the highest level of accounting, balance sheet accounts and profit and loss accounts. Then I have started digging down to lowest level of account groups, right? Means You can have only these two account groups. You can have only these two, balance sheet accounts and profit and loss accounts, or you can have all the headings below this line as your account groups. There is no hierarchy. There is no main group and subgroup. So in our class, I am going to create this many number of account groups. Nearly 17 account groups I am going to create. So this is the concept of account groups. And one more thing here is, see, we can add the GL account groups during the fiscal year if the need arises. We can add any number of account groups during any fiscal year. Then we can also delete the account groups provided no accounts are created in that group. Means in any account group, if you have created some GL accounts, then it's not possible to delete them. It is not possible to delete the account groups. Right? So this
Sir, I have a doubt.
One second. Let me complete this. I will complete it. And here the following are the functions of the GL account groups. Number one, to control the number to be allotted to the general ledger master record created under the respective group. Then to control the display of fields to be maintained in the general ledger master records created under the that is whether every field is required or optional or displayed or suppressed. The first function you can clearly understand at the beginning of the general ledger accounting, and the second function you can understand at the end of the general ledger accounting, because we have a separate topic on this. Tell me.
Sir, if you have created liability is a group, you can't able to create share capital as a group, right?
Exactly. You are right.
You should not create liability group as a group.
Yes.
If you want to create a share capital, right, sir?
Yes, exactly.
Okay.
That's what I told you.
Okay,
Here, you can create only these two headings as account groups, or you can create only these four as account groups, or these headings.
Oh, got it, sir. You have used R.
Yes. Now let us see how to maintain the account groups. Path is same as above. Transaction code OBD4. See, define account groups. Click on new entries, chart of accounts. See in your material, right, in the first column, please write your chart of accounts. Please write your chart of accounts. 3366. In every row, in the first column, you please write 3366 like that. So in our class, I am going to create these as account groups. Okay. Now, for every chart of accounts is equal to 3366 account group SCPL. Means for every account group, you have to give one number. That number can be alphanumeric and it contain up to 4 characters. Just like that, I have taken SCPL. Then name is equal to share capital. From account is 1 lakh to 1 lakh 99. So why from account to 1 lakh? I told you, every GL account is identified with a number, and in our chart of accounts, you defined that the GL account number can contain up to 6 digits. Based on that, we can start from 1 also. 1 to 100 also we can give. Up to 6 digits means we can give 1 to 100 also. But for the uniformity purpose, I have started with 1 lakh because the smallest number containing 6 digits is 1 lakh. This is only for the uniformity purpose, so that every GL account contains 6 digits. That's why I have started from 1 lakh for from account. Then to account, I have given 1 lakh 99 because there is a need to create 100 GL accounts under the share capital. Every GL account is identified with one number. So 100 GL accounts, 100 numbers. That's why I have taken 2. Suppose if there is a need to create 500 GL accounts, you enter 1 lakh to 1 lakh 500. As simple as that. But the question here is, how do we decide how many number of GL accounts you have to create under the share capital as a consultant? As a consultant, we don't decide. Here, the accounts department will tell you, right, how many number of GL accounts they are maintaining relating to share capital in the present system of accounting. So, for that existing number, we add some buffer, keeping in view the future expansion requirements of your client company. Then we decide the two number. So in our class, just like that, I'm maintaining 100 range. This is called range from 2. Then chart of accounts is equal to 3366. Then account group RSPL, reserves and surpluses. From account is 100 100 to 100 199. Here every account group has to have a separate number range. One number range cannot be used for multiple account groups. So for share capital, we have given 1 lakh to 1 lakh 99. So for reserves and surpluses, I have started from 1 lakh 100. You cannot start from 1 lakh 99 because numbers cannot be overlapping. Do one thing. Okay, I will tell you at the end of the class to write. Then chart of accounts 3366, ACDL. I have used SCPL, RSPL, ACDN just like that. So account group is equal to ACDN. Name is equal to accumulated depreciation. From account is 100 200 to 100 299. Chart of accounts 3366, SCLN, secured loans. From account is 1 lakh 300 to 1 lakh 399. Chart of accounts 3366, CLPR, sorry, UNSL I think, unsecured loans. From account is 100 400 to 100 499. Chart of accounts 3366, CLPR, current liabilities and provisions. From account is 100 500 to 100 599. Then chart of accounts 3366, FAST, fixed assets. From account is 200,000 to 200,099. Now, why I have started from 200,000 for fixed assets? I will tell you two reasons. Here I told you that during any fiscal year, we can add the account groups, right? So for example, next year, you may have to add some more account groups on the liability side. In that case, account group should have the number. Without number range, you cannot define the account group, right? So in order to accommodate another account group on the liability side, I have left over all the numbers from 1 lakh 600 to 1 lakh 99,999 because fixed assets is the asset side, right? That is one reason. Now, from the user point of view, every GL account whose number starts with 1 is a liability account. Just observe this. Share capital, reserves and surpluses, accumulated depreciation, secured loans, unsecured loans, current liabilities. These are all your liability side. So every GL account which starts with the number 1 is a liability account. So user can easily understand. Then every GL account which starts with the 2 is an asset account. That's why I have started from 2 lakhs for the fixed assets. Then chart of accounts 3366, CAST, current assets, loans and advances. From account is 2 lakh 100 to 2 lakh 199. Chart of accounts 3366, sale. Now you have moved to income side of profit and loss account. Name sales. Now I am starting with 3 lakhs to 3 lakhs 99. So every GL account which starts with 3 is a revenue account. Chart of accounts 3366, Then OTHR, other incomes. From account is 3,100,000 to 3,199,000. Chart of accounts 3366. INCR, increase or decrease of stocks. From account is 3,200,000 to 3,299,000. Chart of accounts 3366. RMCN, raw material consumption. From account is 4 lakhs to 4 lakhs 99. Chart of accounts 3366. PRSN, personal cost. From account is 4,100,000 to 4,199,000. Chart of accounts 3366. MFRG, manufacturing cost. From account is 4,200,000 to 4,299,000. Chart of accounts 3366. ADMN, administration cost. From account is 4,300,000 to 4,399,000. Chart of accounts 3366. INTR, interest. From account is 4,400,000 to 4,499,000. Chart of accounts 3366. DEPR, depreciation. From account is 4,500,000 to 4,599,000. Click on save. So for our training class purpose, we have created 17 account groups. Now let me explain other points relating to these account groups. So how these account groups are related to our company code? At the time of creating any group, we did not give any company code, right? Then how they are related to our company code? See, for each account group, you have given the chart of accounts, right? So in the previous step, right, we have assigned the chart of accounts 3366 to our company code. So all these account groups are related to our company code. And suppose you have A company code, B company code, C company code, right? And all the three company codes are using same chart of accounts. Means what? For all the three company codes, we assign the same chart of accounts 3366, right? In the previous screen. Then these account groups will be applicable to all the three company codes. That is what I told you in the chart of accounts. When several company codes are using the same chart of accounts, the account group will be same in all the company codes. That is one point. Now, here, every account group has to have a separate number range. One number range cannot be given for multiple account groups. Please write down this point here. One second. Here you have some space in your material. Okay, please write down here. Otherwise, below the material also you can write. Wherever you find the space, you write. Every account group should have a separate number range. Every account group should have a separate number range. Now, one more thing here is, one more point I want to explain is, look at the screen everybody please. For share capital, we have defined 1 lakh to 1,99,000. Okay. Then immediately for reserves and surpluses, you have started from 1,100,000. Now, during one fiscal year, under the share capital, we have created all 100 GL accounts. Still, there is a need to create some more GL accounts, but your number range is exhausted. In that case, what to do? Without number, create the GL account. And the number range for share capital is over. Still, there is a need to create some more GL accounts under the share capital. That's why what we do is, in the real time, at the time of deciding these numbers, you keep some more buffer between the number ranges of two account groups. For example, for share capital, we have taken 1 lakh to 1,99,000. Then for reserves and surpluses, you can start from 1,01,000. 1,01,000. So that if the need arises, you can create some more GL accounts. Even if the number range is exhausted, we can extend the number of the account group. That's how in the real time, for every account group, you keep some more buffer. These are the points I want to explain further, right? So we have defined the account groups. So remaining things we will see in tomorrow's class. Akila, you have any question? Yeah, I'm coming, Chandrasekhar. See, if you have the question to the current topic, you can just like that type it in the chat box. No issues. Akila, you have any questions? Okay. Anil? Okay. Chandrasekhar, tell me, what's your question?
Yes, sir. You told that if share capital 1,99,000 is over, we can extend this 1,100,000 to 1,01,000, so that the first group extends. Hello.
Yes, yes, I'm listening to you.
In that case, suppose I've already used RSPL account number also, and I've created GLs under the RSPL.
That's why
Then
what
I
I'm
can.
is, no. What I'm telling is, for the reserves and surpluses, see, at the time of the creation itself, right? For the reserves and surpluses,
Oh, at the time of.
yeah. Not after creation, right? At the time of creating account groups itself, for reserves and surpluses, you start from 1,01,000.
Oh.
Got it, no?
Yes, sir.
Okay.
Okay.
Adi?
And one more question,
Yes.
sir. Can you explain what is increase or decrease in stock and consumption group?
See,
I have some doubt.
So the increase or decrease of stocks are used when we transfer the finished goods stocks from one location to another location, or when we transfer the finished goods from plant to finished goods warehouse. So the GL accounts are to be updated from SD, right?
Okay.
We discuss elaboratedly at the time of SD integration.
Okay. Thank you.
Gadi, you have any questions?
Sir, I have one question.
Tell me.
Hello.
Yeah, tell me.
Sir, when you are creating a business area and the company code, you have told that some line of activity, like manufacturing of chemical, manufacturing of paper and all.
Yeah.
Okay, now today you have told that those, groups, group in the sense line of activity as a company code. How can it possible? Under one company code, can we create a line of activities, or one line of activity itself can we create as a company code?
No. See, here under the same name, right? If you are doing the business, suppose you are the Tata Steels Limited, right? So under the same name, you are doing the business in the iron extraction, right? That is one line of activity. Then iron sheets manufacturing, that is another line of activity. Okay. So in that case, remember the name of under the same name, right? We have the two lines of activities. In that case, each line of activity is maybe a business area or a profit center based on the situation. Till now clear?
Okay.
Now,
yeah.
Coming to the same example, in order to do the iron ore extraction, right? You have created a separate legal entity. Okay. That's a company code. Then, in order to manufacture iron sheets, you have set up a separate legal entity. That is your another company code. So, for two line of activities, you have set up a separate two legal entities. For example, Tata Steel Extraction Limited, Tata Steel Sheets Manufacturing Limited. In that case, Tata Steel Extraction is a company code which is used to carry on the activity of steel extraction. And Tata Steel Sheets Manufacturing Company Limited is another company code. This is a separate legal entity which is set up for manufacturing of the steel sheets. See, in the name of under the same name, if you are carrying on different activities, each line of activity may be a profit center or business area. But in order to carry on each line of activity, if they have set up a separate legal entity, then that separate legal entity will be created as one company code. Got it now?
Yeah, I got it. Is there any mandatory from the government to create, if you want to do a different business, you have to create a separate legal entity, right, sir?
Yes. Yes. Generally,
you can't like that. You can't do that.
One second. Generally, what happens is, at the time of formation of your company, you have to submit your memorandum of association, right? So in the memorandum of association, you have one clause, objective clause. So in the objective clause, we have to specify which type of businesses we are going to deal. Suppose you are expanding your business on the basis of your objective clause, then there is no need for separate legal entity. Suppose if you want to start a business which is not there in your objective clause, then you have to set up a legal entity. You are not permitted to start a business which was not there in your objective clause.
Got it, sir.
Yeah. Then
thank you, sir.
Now it's clear, no?
Yeah, it's clear, sir. Thank you.
Now, Himasailaja, any questions? Okay. Manoj. Sunil, I think you came late, right? Teja, any questions?
No, sir.
Okay.
No, sir.
Yeah. Within 2 minutes, you get the material, Himasailaja. Okay, then. See you tomorrow, same time. Good night and good day. Okay, Rani. So, we are in basic settings. In the previous class, we have completed account groups. Step number 3.3, we have completed in the previous class. Now, step number 3.4, define retained earnings account. So first I will explain what is the concept of retained earnings account. One second, let me close all other materials. Yes, Gadi. So first I will explain what is the concept of retained earnings account. See, retained earnings account. While creating the expenses accounts and incomes accounts, we have to specify the profit loss account type. That's why it is compulsory to create one retained earnings account. We can define any number of profit loss account types. For example, operating profit and loss account to know the operating profit, and non-operating profit and loss account to know the non-operating profit or loss. At the end of the year, the balances in these profit and loss accounts will be taken to the balance sheet. Means here we create some number of GL accounts. Among them, there are some expense accounts, some incomes accounts. But at the time of creating the incomes accounts and expense accounts, you may have to specify the profit loss account type. Like whether that GL account is related to operating profit and loss account, or whether that GL account is related to non-operating profit or loss. So if the requirement is to display operating profit separately and non-operating profit separately, then we have to define two profit loss account types. If necessary, we can define any number of profit loss account types, but minimum there should be one profit loss account type. If you don't create the profit loss account type, later on you cannot create the GL account master records. Suppose you have created two profit and loss account types, operating profit and loss account and non-operating profit and loss account. Operating profit and loss account and non-operating profit and loss account. Then the balance in these two profit and loss account types will be transferred to balance sheet at the end of the year. So first let us do the step, then again I will explain. May I know who is this just now joined as ASH? Ash? May I know who is this? May I know who is this ASH? Ash? One second. Yeah, may I know who is this Ash? Okay. So first let us define the retained earnings account, then we will see the other things relating to retained earnings account. Transaction code OB13. Sorry, OB53. Transaction code OB53 / and OB53. Chart of accounts is equal to 3366. Chart of accounts is equal to 3366. Click on enter. P&L statement account type is equal to X. We can give any identification. X, just like that I'm giving X. Account is 100 100. Account is 100 100. So why I have given the account number 100 100? See, the balance in the P&L account is displayed on the liability side of the balance sheet under the heading reserves and surpluses. See, the balance in the P&L account is displayed on the liability side under the heading reserves and surpluses. So this account is to be created under the account group reserves and surpluses. So for this reserves and surpluses account group, we have defined the number ranges 100 100 to 100 199. That's why I have taken this 100 100 now. That is the reason. But technically speaking, you can take any number between these two numbers. Click on save. And this is called warning message. See, account 100 100 not created in the chart of accounts 3366. It is called warning message. Actually, we have given the GL account number only here. We did not create the GL account. That's why it is giving this warning message. The GL account is created later on in the general ledger accounting. But for the time being, it is only a warning message, right? So you can just ignore it. To ignore the warning message, I told you to click on enter button. Now, here I told you that based on the client requirement, we can create any number of profit loss account types. Why? Let us take one example. See, for example, in the balance sheet, we have to display operating profit separately and non-operating profit separately. So how do we derive operating profit and how do we derive non-operating profit? We have to maintain two profit loss account types. So to derive the operating profit loss account, we have to maintain one GL account, operating profit loss account. Let us say this is type X. So this is 1,100,000. Then we have to define one more GL account, non-operating profit loss account. Let us say this is type Y and this number is 100,101. So we define two profit loss account types. But what is operating profit and what is non-operating profit? Here, operating profit or loss, it is the difference between operating revenues and operating expenses. Operating revenues means again, These are the revenues generated from the main business operations of the company. Example, sales. So sales revenue is always called operating revenues. Then operating expenses. These are the expenses which are incurred to run the main business, like rent, wages, salaries, etc. etc. So all the expenses which are incurred to run your business are called operating expenses. So the difference between operating revenues and operating expenses is called operating profit or loss. Then coming to non-operating profit or loss. It is the difference between non-operating revenues and non-operating expenses. Again, what is the non-operating revenue? Okay, Ash. Okay, no problem. You continue in this class. Okay, you listen to this class, then we will see. Now, yeah. So non-operating profit or loss. It is the difference between non-operating revenues and non-operating expenses. Now, non-operating revenues means these are the revenues generated from the business operations which are not related to main business. Example, dividend on shares if the main business is textiles manufacturing. Here, our main business is we are in the textiles manufacturing. So we produce the textile products, we sell them. Then we get some revenue. That is called sales revenue. So this is operating revenue. Now, this year we are having some surplus funds. So instead of keeping these surplus funds in the bank account, we have invested in the shares of other companies. Then at the end of the year, that other company has declared the dividend. This is called non-operating revenue because your main business is not making the investments in other companies. Your main business is textiles manufacturing. But because we are having some surplus funds, you invest in the shares of other companies. So you receive some revenue. That is the non-operating revenue. But if your main business itself is making the investments in other companies, yours is an investment company, then the dividend income will be operating revenue. That's how you have to decide whether the revenue is operating or non-operating. So if the revenue is related to main business, that is operating, otherwise non-operating. Then non-operating expenses. So these are the expenses incurred to earn non-operating revenues. Example, brokerage paid on purchase of shares. So in order to purchase the shares, you paid some commission to the stock exchange member. So that is called non-operating expenses. Now, whether it is a operating expenses, operating revenues, or non-operating expenses, non-operating revenues, we have to maintain the ledger accounts now. So at the time of creating the GL accounts, when you are creating the GL account salaries account, you specify type X. When you are creating the GL account rent account, you specify type X again. When you create the GL account wages, you specify type X. When you create the sales account, you specify type X. Means like this, for all the operating expenses and operating revenue accounts, you enter type X. Then at the end of the year, the balances in these GL accounts will be transferred to type X. What is type X? Operating profit and loss account. So the difference will be either operating profit or operating loss. Similarly, when you create when you create dividend and shares account, you enter type Y. You specify type Y. Then when you create the brokerage and shares account, you enter type Y. So what is type Y? Non-operating profit and loss account. So at the end of the year, the balances in these two GL accounts will be transferred to type Y, which means non-operating profit and loss account. Then the difference will be either non-operating profit or non-operating loss. That's how, with the help of the multiple P&L account types, we can meet the requirement of the client to display operating profit separately and non-operating profit separately. Let us take one more example. Just an assumption. We have to display trading profit separately, operating profit separately, non-operating profit separately. In that case, we maintain three profit and loss account types. Trading account, type X. Operating profit and loss account, type Y. Non-operating profit and loss account, type Z. Here, I am using XYZ just like that. You can use any identification. But minimum to minimum, we have to define one profit and loss account type. This is what you have done. Suppose, if you want to define type Y also, how to do that? Very simple. In the same screen, here, in the same screen, type Y, account is 10101. Even though it's a non-operating profit and loss, it is also part of your reserves and surpluses. So click on save. Ignore the message. So in our training class, we defined two profit and loss account types. Its effect I will show you at the time of creating the GL accounts. So this is the concept of retained earnings account. Now, if you see the material, posting period variant. So what is the posting period variant? First, let us try to understand. See, the posting periods are defined in the fiscal year variant. If you remember, in the fiscal year variant, you defined that normal posting periods are 12 and the special posting periods are 4. So, to prevent documents from being posted to wrong posting periods, desired periods can be closed. Usually, the current posting period is open and all other posting periods are closed. Means here in SAP, we have the functionality that we can post the business transactions into those periods which are opened for postings. See, for example, in the fiscal year variant, right, we defined that. Yeah, Jerisha, Himasalija, tell me.
Sir.
Your voice is breaking.
Sir?
Yeah, Jerisha.
Yeah, could you please go slowly, sir? Could you please explain slowly?
Okay. Now, see, in the fiscal year variant, we defined that normal periods are 12. Then, special periods are 4. So, normal periods 12 means one to 12. Okay. Then, 4 special periods means 13, 14, 15, 16. So these are the special periods we have defined. Now, out of these 12 normal periods and 4 special periods, in SAP, we can define any number of periods opened for postings. Because in SAP, we can post the business transactions only those posting periods which are opened for postings. Technically speaking, we can open all the 12 normal periods and all the 4 special periods at a time. But we never do that. Generally, what we do is, we open only the current period and all other periods are closed. So we are using calendar year as fiscal year, right? So according to the calendar year fiscal year, October is 10th period, right? So in that case, 1 to 9 are closed, only 10 is open and 11 and 12 are closed. 1 to 9 are closed and 11 to 12 are also closed. Only 10th period is opened. So in that case, we can post, the user can post the business transactions only in the 10th period. What is the advantage of this? At the time of posting every business transaction, the user has to enter a period, the user has to enter the date. For example, today date is, in India I'm talking, 6/10/2017. It is the Indian format date, month, year. So in India, 6/10/2017 is the date. So today I'm posting one transaction. So I have to give this date, 6/10/2017. But by mistake, I have given 6/9/2017. In that case, system immediately throws error because ninth period is closed. So whenever I see the error, then I can know the reason. Oh, I have entered wrong date. So I will rectify the date, then it is posted. That's how, using the posting period variant, we can ensure that the business transactions are posted into correct posting periods. That is the advantage of the posting period variant. Now, one more thing is, we are in October, but I have forgotten to post some transactions in the month of July. Just now only I came to know. Then what to do? We can open the July period, which was closed. We can post the transaction. Again, we can close it. So we can post the periods also. If you want to post any transactions, then again, after posting the transactions, we can close the period. But to open the closed period as a lower level employee, as an accountant, I don't have the authorization. Generally, the authorization to open the closed period is given to some higher level employee. For example, manager finance. So as an accountant, I have to put one request to my manager finance, requesting him, sir, open the July period. It's not just giving the request. I have to give the reason why I'm requesting him to open the closed period. Then I have to say that, sir, I have forgotten to post some transactions in the month of July. So here what is happening again? I am also made automatically accountable for my own mistakes. That is the another advantage of posting period variant. So in short, in the posting period variant, we define how many numbers are opened for postings and how many number of special periods are opened for adjustments. Now, generally we open only the current period and all other periods are closed. Technically, it is possible to open all the periods, but we never do that. And the periods are opened by specifying the range. Range means from period and to period. By specifying the range, we can open the periods. And at the end of the fiscal year, in addition to normal posting periods, the special periods are to be opened for the purpose of adjustments. So this is the concept of posting period variant. See, the following activities are involved in the maintenance of posting period variant. Number one, define the posting period variant. Means first we have to define the posting period variant, then assign the posting period variant to the company code, then we have to open and close the posting periods. So we have to perform these three activities to open the periods. Now see the first step in the material. Step number 4.1. Definition of posting period variant. Path is SPRO, financial accounting, every month we have to open the period, Gadi. As a part of month-end activities, right, we open the next period. I will explain you. At the time of doing the setting, I will explain you. The special posting periods are at the end of the fiscal year. Akila, the special periods are opened at the end of the fiscal year. They are not opened during the fiscal year. So, path is SPRO, financial accounting global settings, document, posting periods, define variants for open posting periods. Transaction code is not there. Please add the transaction code there. OBBO for the step number 4.1. transaction code is OBBO. Click on new entries. Variant is equal to, give some name. Let us use our company code name. See, if you have observed, everywhere I am giving, for every object, we are giving the company code name only, so that we can remember easily. Variant is equal 3366. Name is equal to posting period variant for 3366. Name is equal to posting period variant for 3366. Click on save. Then see the step number 4.2. Assign posting period variant to company code. Path is same as above, and the transaction code is not there. Please add the transaction code again, OBBP. OBBP. Path is same as above means you have to click on back arrow till you reach IMG screen. See, assign variants to company code. Click on position. So position button is very similar to search button. Click on position. Company code is 3366. Company code is equal 3366. Click on enter. Variant is equal to 3366. Our company code has been taken in the first line, and against that variant is equal to 3366. Click on save. So we defined one variant and we have assigned this variant to the company code. Now we have to open the periods for the company code for the posting period variant. We have to open the periods for the posting period variant. Sorry. See the step number 4.3. Open and close posting periods. Path is same as above. Transaction code OB52. Transaction code OB52. So click on back arrow till you reach IMG screen. Whenever you see path is same as above, you have to click on back arrow. Sorry, 1 second. I'm sorry. So open and close posting periods. Click on new entries. Variant is equal to 3366. Variant is equal to 3366. Here, look at the stream, please. A for account type. A for account type. Account type is equal to plus. So what is the account type? Please go back to notes. Put heading account types. Put heading account types. The account types describe the nature of accounts, in SAP. The account types were already defined in the system. The account types were already defined in the system. We cannot define our own account types. we cannot define our own account types. The following are the account types. The following are the account types defined in the system. Number 1, GL accounts. Number 1, GL accounts. Within brackets, yes. So the GL account type is represented with the letter S. Number 2, vendor accounts. Within brackets K. Number 3, customer accounts. Within brackets D. Number 4, asset accounts. Within brackets A. Number 5, material accounts. Within brackets M. So here, these are the account types which were already defined in the system. So each account type is identified with one letter. We cannot change them. Now, here we have to enter account type. Means, to which account type you want to apply this post-import variant. Means, if you want to apply this post-import variant only for GL accounts, you enter yes. If you want to apply this post-import variant only for vendor accounts, you enter K. Means, you have this facility, to open different periods for different account types. That facility is available, but generally we open the same period for all account types. In order to specify that, we enter plus. So account type is equal to plus. Within brackets, please write down. Within account type is equal to plus. Within brackets, please write down. Plus indicates that the post-import variant is applicable to I'm sorry for today. The post-import variant is applicable to all account types. Now, here we have the two types of periods, normal posting periods and special posting periods. So we have to open the normal periods and special periods separately. So first we have to open normal periods. To open the normal periods, from period 1 is equal to 1. First to write down, I will explain. From period 1 is equal to 1. Year is equal to 2017. To period 12. Year is 2017. See, this is called range of periods. I told you, the periods are opened by specifying the range. Here, we have opened from first period of fiscal year 2017 to 12th period of fiscal year 2017. So, in our example, we have opened all the 12 normal periods. But how to open specific periods, I will show you. Now, first let us open special periods again. In order to open the special periods, from period 2 is equal to 13, year is equal to 2017, year is equal to 2017, and don't give the year 2018. If you give the year 2018, they open January 2019. So fiscal year only we have to enter, and these special periods are related to fiscal year 2017. To period 16, year 2017. Click on save and enter. Now, so in our training class, we have opened all the 12 normal periods and 4 special periods. But how to open only the current period? Very simple, just look at the screen. Current period is October, means 10th period, right? So from period 10, year 2017 to period 10, that's it. 10 to 10. Click on save. Suppose if you want to open July, August, September, October, right? So July means 7th period, right? In that case, you enter from period 7. From period 7, year 2017 to period 10 means 7 to 10. That is 4 periods are opened. Click on save. Okay, fine. We have opened only the current period, right? Now, October is over. Then November comes. In order to enable the users to post the transactions in the November period is to be opened. So unless you open the November period, nobody will be able to post the transaction in the month of November. So at the end of every month, we perform some activities in accounting, and these activities are called month-end activities. As a part of month-end activities, we open the next period. So when the November comes, on the 31st October 2017, once the month-end activities are over, right, we come to the same screen. We enter the period number 11, year 2017 to period 11. That's it. Then only November is opened. So when you open the current month, when you open the current period, yes, Teja. See, I will come to that point. When you open the current period, the previous period is automatically closed. When you open the current period, the previous period is automatically closed. We need not do any separate activity to close the periods. So in our class, I am opening all the 12 periods. Click on save. Now, here you have from account and to account. Means we have the facility to open the separate periods for separate accounts also. But generally, right, we don't use it, but you have the facility to open the separate periods for separate accounts also. Because here you have the from account number and to account number. Now, okay, Teja. So if you don't give any account numbers, it is applicable to all the accounts. Now, here one more thing is, I told you that every month the new period is to be opened. To open the new period, right, the user has to come to the same screen. Okay. So from where did you come to this screen? Just let us go back. One second, let me check whether we have to save it or not. Okay. So to open the periods, you have to come to the same screen, right? So to this screen, you came from IMG screen. And I told you that IMG screen is always given access to consultants only. End users will not have the access to IMG screen. In that case, how the end user can open the periods? For opening the periods, again, you have to take the help of consultant. Right? To be speaking technically at this point of time, right? But that is not necessary. In order to open the periods for the same screen, the path is also available from SAP Easy Access. This is called user level maintenance of posting periods. Put heading in the notes, please. At the end of every month, do one thing. Heading is user level maintenance of posting periods. User level maintenance of posting periods. At the end of every month, the user has to open the periods. The user has to open the periods. For this, path is also available for this Path is also available from SAP Easy Access. From SAP Easy Access screen. This is called user level maintenance of posting periods. Path. SAP Easy Access screen. Path. SAP Easy Access screen. Accounting. Financial accounting. General ledger. Environment. Current settings. Open and close posting periods. Transaction code S_ALR_37003642. S_ALR_87003642. See, you came to the same screen. Click on position. Continue, please. Click on position. Posting period variant is equal to 3366. Click on position. Posting period variant is equal to 3366. Click on enter. Look at the screen, please. Click on enter. Look at the screen. Here, our posting period variant has been taken in the first line. Right? Change the periods as necessary. And click on save. So in our training class, we have the number of variants, right? Because number of students are there in the server and they are doing the practice. But in the real time, we have only one variant according to your company code only. Now, the next one is creation of number ranges for document types. This we'll see tomorrow. So this topic will straight away takes 45 minutes to explain you, right? That's why we will look into this topic in tomorrow's class. Akila, you have any questions today? Okay. Anil. Okay. Ash, do you have any questions in today's class? And one more thing, Ash and Roni, right? Once you register yourself, I will send the recording into the previous class. Chandrasekhar, can you please mute yourself? Whenever your turn comes, you can unmute yourself and you can ask me your doubts. Yeah. So till now, our morning batch, no? So, no, not this one. Daily morning batch. See, till now, 6 classes are over, right? So once you register yourself, I will send the recordings of the 6 classes, okay? And today is the 7th class. Then, Chandrasekhar, you have any doubts?
Yes, sir. Today class, there is no doubt. But for fiscal year, I've sent a mail, and for
Okay.
how to use on
You have sent,
common chart of accounts.
sorry, how to use?
Common chart of accounts for two company codes.
See, here, for example, yesterday we have defined our chart of accounts 3344, right?
Yes, sir. 3366.
In the assigned company code to chart of accounts screen, right? We have assigned,
I have,
one second, we have assigned to our company code 3366 chart of accounts. Suppose, for example, 4455 is also your company code, right? Against this, we assign 3366 chart of accounts, and 4456 is also your chart, your company code. And if you want to use the same chart of accounts for that company code also, assign 3366. Like that, if you want to use the same chart of accounts for the multiple company codes, for against those multiple company codes, we assign the 3366 in this particular screen.
I have done this, sir, assignment. SU01 and SU02 is two company codes.
SU01 and SU02. Huh?
Yes. One is,
Yeah.
I have assigned here my chart of accounts SU01 to consultants and communications.
Okay.
Here I have a doubt. Consultants is different line of activity and communications is different line of activities.
Yes.
In that case, GLs varies, no?
That's why.
How to?
Yeah. That's why we cannot use the two chart of accounts for the. In that case, we cannot use the same chart of accounts to these company codes. Communications have to have its own chart of accounts, and the consultants has to have its own chart of accounts.
Yes.
So,
can you give me one example where we can use the same chart of accounts for both multiple company codes?
for example, you are in textiles manufacturing, right? Let us say Surya Textiles Industries Limited. Okay. Hello.
Yes, sir.
So Surya Textiles Industries Limited is your company code, right? Now, your turnover has been increasing like anything, and you have been earning more huge profits, on which you have to pay lot of income tax. Now, your tax planning team came into picture. They said, sir, in order to avoid huge imposition of income tax, right? Let us divide the present entity into another entity. Then you have created another company code. I mean, you have formed another legal entity under the Indian Companies Act, Suryavamshi Textiles Limited. Surya Textiles Limited is also yours. Suryavamshi Textiles Limited is also yours. And the nature of business is same. In that case,
same. Okay, sir. Thank you.
Yes. In that case, they can use the same chart of accounts.
Okay, sir. Thank you. And fiscal year, sir. One more question. If I started my company in the month of January, either I can show as a closing year in the month of March, or I can carry out to next year and show for 15 months as the end of the year.
Exactly.
Now I am closing my business in the month of July.
Okay.
So April, May, June, July, I have conducted my business.
Okay.
Now I am winding up my company.
Yes.
In that case, how to then will be July?
In that case, we have to define one shortened fiscal year, right? We have to define one shortened fiscal year. So this is called year dependent fiscal year. So the shortened fiscal year and year dependent fiscal years we did not cover till now.
Okay, sir. Okay, sir. Sorry.
So no problem, Chandrasekhar. So we cover later. We do have the topic on shortened fiscal year and year dependent fiscal year.
Yes.
Also,
Yes.
I did not tell you how to create our own fiscal year variant. So these two topics are to be covered later.
Okay, sir. Thank you, sir.
Then Gadi, you have any questions?
Yes, sir. I have a question.
Tell me.
Same. Here only chart of accounts and special. I mean this country specific chart of accounts. Sir, actually in chart of accounts we have 100 GL accounts. Okay.
Okay.
And country specific chart of accounts we have 102 chart of account. I mean GL accounts.
Yes.
For the same company code, we have assigned both because we are running a
Yes.
business in other country also.
Yes.
For that we're supposed to give a report.
Yeah.
So how that chart of, I mean we post only transaction in chart of accounts.
Yes.
We will not post any transactions in
Country.
country specific. Okay. How that will pick?
See, other company code, right? Suppose we have a GL account 1,520,000. So for others, it will come later on, right? See, in the control data tab, right? I think you know there are two segments in the chart of there are two segments in the GL account: company code segment and chart of account segment. So in the company code segment, we have an alternate account number field. So this is the GL account in the operational chart of accounts. So the GL account in the operational chart of accounts will be linked with the GL account in the country specific chart of accounts. So multiple GL accounts of the operational chart of accounts can be linked with the single GL account in the country specific chart of accounts. In that case, even though the number of GL accounts in two chart of accounts are different, there is no any issue.
Okay.
And again, we will discuss this elaboratedly at the time of creating our GL account master.
Okay, sir. And one more question, sir.
Yeah.
In today's class,
Hmm.
you have edited that period in the
Okay.
current period itself.
Yeah.
Is it possible, or we have to define one more row? We have to open one more period apart from that
No.
every month?
No. Every month you can edit the period. It's not
Okay.
necessary
You can just
variance every month. It is not necessary
Okay,
to fill the variance every month. You create for the existing variance.
okay, sir. Thank you.
Then Himasailaja, any questions? Then Manoj,
I'm fine.
okay.
Thanks.
Roni, okay, Gadi. Roni, okay. Roni, you want to continue in this batch? You have to confirm it, huh? Okay then. Then Srinivas, any questions?
Yes, sir. No.
Okay. Sunil, Tafik, okay. Teja, okay then. Okay, Ashu, I think you are also fine with this. Okay. Okay then. See you tomorrow same time. Good night and good day.
Thank you, sir.
You're welcome.
Thank you.
See, in yesterday's class, we have completed posting code variant. Now see the step number 5, creation of number ranges for document types. So first we have to understand what is document in SAP. Then what is is called documentary evidence. That not legally allowed to enter a business transaction into accounting system. For example, today we purchased materials. So for this business transaction, the documentary evidence is purchase invoice sent by vendor. Without purchase invoice sent by vendor, it is not possible, it is not legally allowed to enter that purchase transaction to system. Similarly, today we have paid rent. For this rent business transaction, the documentary evidence is rent receipt given by landlord. Rent receipt given by landlord. Then today you paid some porter charges and the porter person cannot give us any receipt. Then what is the documentary evidence for this? At the time of paying the porter charges, the cashier will prepare one document. On that document, he puts the today's date and he will enter the name of the person to whom you are paying the porter charges, the account towards which you are paying, and amount in figures and amount in words. On the right hand side lower corner, he will take the signature of that porter. Then that becomes the original document. That is called voucher. So like that, for every business transaction, there should be documentary evidence. That documentary evidence is called original document. Then you have one more type of document, processing documents. These include recurring documents, sample documents, and accounting documents. So recurring documents, sample documents, we will discuss in the general ledger accounting. But at this point of time, what we have to understand is accounting documents. So accounting documents are also called generally documents. Whenever you say documents, it implies only accounting documents. So accounting documents means the accounting documents represent the posting of original documents into system. So in the other words, for example, accounting document is nothing but accounting entry, nothing else. Accounting document represent accounting entry posted into the books of accounts. In IT, accounting document is the accounting entry posted into SAP system. See, for example, today we have paid rent. Actually, this is the business transaction. For this business transaction, the document evidence is rent receipt. So based on this, on the evidence of this rent receipt, sorry, one second. So on the evidence of this rent receipt, we enter the accounting entry debiting rent account and crediting bank account. This is called accounting entry and accounting document. Similarly, today we have purchased raw materials. So this is the business transaction. For this business transaction, the physical documentary evidence and the original document is purchase invoice. Based on this purchase invoice, we enter the entry into accounting system, debit purchase account and credit vendor account. This is called accounting entry or accounting document. Like that, accounting document represents accounting entries or journal entries, nothing else. So for every business transaction, there are two types of documents available. Number one, original documents. These original documents are in the physical form. Once the documents are posted, once the entries are posted, these original documents will be kept in the files and the files will be kept in the record room. Another set of documents is existing in the database in the soft form. They are nothing but our accounting entries. So accounting document is a document. I hope it is clear for everybody. Then in SAP, on which company code it was incurred, in which month it was incurred, in which currency the business transaction is incurred. Like that, all the details of the business transaction are contained in the document header. I will show you once we start the posting transactions. I will show you what is the document header. Then you have another part. Actually, the number is wrong. It's only 2. So document line item part. Document line item means what? For example, today we paid rent. Then we post the accounting entry, rent account data to cash. So in this accounting entry or in this accounting document, this is called one line item and this is called another line item. So line item means simply saying, so the rent account is called one line item number 1 and the cash account is called line item number 2. And a document can contain up to 999 line items including debits and credits. And one more thing here is the total of the debits should be equal to total of the credits. And in order to post an accounting document, we require minimum 2 line items. One line item should be debit line item and the other line item should be credit line item. This is nothing but your double entry system of accounting, right? So the same principles also applies in SAP also. Now, the document line item part contains the data such as posting key, GL account number, and the account amount, etc. So the line item part also I will show you at the time of posting the transactions in the general ledger. Now, we have to understand what is this document type. What is this document type? Let us take one example. Today, we have incurred 2 business transactions and we have posted 2 accounting entries. Like rent account debtor $3,000 to bank, $3,000. Then we posted one more entry, material account debtor $5,000 to vendor account, $5,000. Now, by looking at these accounting entries, for example, rent account debtor to bank, what is the nature of this business transaction? Rent payment, right? Then, material account debtor to vendor account, what is the nature of this transaction? Material purchase. So, by just looking at these accounting entries, we can say the nature of the business transactions here, because we are having the accounting knowledge and we are the accounting professionals. That's why by just looking at the accounting entries, we can find out or we can understand the nature of the business transactions. But there are some people in the organization, who don't have any accounting background and who don't have any accounting knowledge at all, but still they are concerned with analysis of accounting reports. So in that case, how can they know the nature of the business transaction but by just looking at the accounting entries? It becomes very difficult for them. That's why SAP has developed a concept of document type. And these document types were already defined in the system. There are some 51 plus standard document types are available in the system. We can use them as it is. Otherwise, we can define or we can create our own document types. So, now here serial number, document type, description, account type, and number range. So serial, these are the sum of the document types which we frequently use, and these are the sum of the document types which are related to FI. So serial number 01, document type SA, description GL account posting, account type GL accounts. Document type 19, serial number 19, document type KR, description vendor invoice. Serial number 15, document type KZ, description vendor payment. Serial number 17, document type KA, vendor other document. So these 3 document types are related to vendor accounts. I will explain you. Then serial number 18, document type DR, customer invoice. Serial number 14, document type DZ, customer payment. Serial number 16, Document type DA, customer other document. And these three document types related to customer accounts. Then serial number 04, document type AF, depreciation, asset accounts. What is this? Here, for example, today we have paid rent. Then this is the business transactions to be entered into accounting system. So when the user enters this business transaction to system, an accounting document is posted, like rent account to bank. On the face of that accounting document, the system automatically gives the letters SA. When we post a business transaction, the general ledger accounting, an accounting document is posted. On the face of that accounting document, the system automatically gives the letters SA. Today, we purchased materials. We received the purchase invoice, and based on the purchase invoice, we have entered the accounting entry debiting purchase account, crediting vendor account. Means an accounting document is posted. On the face of that accounting document, the system automatically gives letters KR. System automatically gives. Then today we have done some payment to vendor. Vendor has given the receipt. Based on that receipt, we have posted the accounting entry vendor account to bank. On the face of that accounting entry, the system automatically gives the letters KZ. The system automatically gives the letter KZ. For example, today we returned some goods to vendor. So vendor has given the credit note. Then when the credit note is entered into system, an accounting entry is posted. On the face of that accounting entry, the system automatically gives the letters KA. Then similarly, when you post the sales invoice, the system automatically gives the letters DR. When you post the customer payment means payment received from the customer. The system automatically gives the letters DZ, then customer other document DA, then depreciation AF. Now, during the implementation, we have one phase wherein we provide the training to the end users, and also we prepare end user manuals. End user manuals describe how the end user transactions are to be entered into systems. These are called end user manuals. How to use the system. So these are contained in the end user manuals. So at the end of the classes, I will send you some templates for the end user manuals. Now, so in the training classes and also in the end user manuals, we clearly specify that, we clearly write that on the face of any accounting document, if you notice the letters SA, understand that that business transaction is related to GL account posting. The business transaction related to GL accounts. In the general ledger accounting, we can post only expenses and revenues. Then, on the face of any accounting document, if you notice the letter KR, understand that that business transaction related to vendor invoice. Vendor invoice means purchase. And on the face of any accounting document, if you notice the letters KZ, that business transaction related to vendor payment. And if you notice the letters KA, that business transaction related to vendor other document. Any business transaction relating to vendor other than invoice and payment is represented with KA. For example, purchase returns. Then similarly, on the face of any accounting document, if you notice the letter DR, understand that that business transaction is related to customer invoice. Customer invoice means sales invoice. If the document type is DZ on the face of any accounting document, it is related to customer payment. And if it is DA, sales returns. And if it is AF, depreciation. So with the help of the document types, user can easily understand the nature of the business transaction. See, here the document controls the following. First, let us see the second one. The document type controls the following. It differentiates the business transactions among the account types, and for every account type, it differentiates among the nature of the business transaction. Means, if the document type is SA, account type is GL accounts. If the document type is either KR or KZ or KA, the business transaction is related to vendor accounts. If the document type is either DR or DZ or DA, the business transaction related to customer accounts. If the document type is AF, the business transaction is related to asset accounts. Asset accounts. This is one of the functions of the document types. The document types differentiates the business transactions among the account types. Then for every account type, it also differentiates the nature of the business transaction. Means if the document type is either KR or KZ or KA, basically the business transaction is related to vendor accounts. But among the vendor accounts, if the document type is KR, the business transaction is purchase invoice. If the document type is KZ, payment to vendor. If the document type is KA, vendor other document, that is purchase returns. Then if the document type is either DR or DZ or DA, the business transaction is basically related to customer accounts. Among the customer accounts, if the document type is DR, customer invoice, means sales invoice. If the document type is DZ, customer payment from customer. If the document type is DA, customer other document. And if the document type is AF, that is related to asset accounts. That is the concept of the document types. Till now, I hope it is clear to everybody. Now, in an accounting year, let us assume that in an accounting year, we have to post 1 lakh number of 100,000 or 1 lakh number of business transactions in the general ledger. Means 100,000 number of accounting documents are posted in the general ledger accounting. In that case, how to identify the individual documents posted in the general ledger accounting? Similarly, in an accounting year, there is a need to post 1 lakh number of purchase invoices. So when we post 1 lakh number of purchase invoices, 1 lakh number of accounting documents are posted. In that case, how to identify every individual document relating to purchase invoice posting? For that only, we use the number ranges. Number ranges means from number and to number. So every document, every individual document is identified with a number. That's why for every document type, we define the number ranges. And this number can contain up to 10 digits. This number can contain up to 10 digits. For example, for SA type, I want to define 1 to 1 lakh. I want to define, it's not mandatory, please remember. Based on the client requirement and based on the size of the organization and based on the volume of the transactions you have to post in the year, you have to define this much number range. For example, in our training class, for SA, I will define 1 to 100,000. For KR, 100,000 to 200,000. 100,000 1 to 200,000. For KZ, 200,000 1 to 300,000. For KA, 300,000 to 400,000. Then for DR, this is the number range. For DZ, this is the number range. For DA, this is the number range. And for AF, I want to define this number range. Now, let us assume today is first day of the accounting year. Then today we have posted the first business transaction in the general ledger. Then the system will take number 1. When you post the second business transaction in the general ledger, it will take number 2. Third transaction number 3. Fourth transaction number 4. Like that, you can post up to 1 lakh number of business transactions in the general ledger in the year. Then, when you post the first purchase invoice in the accounting year, the system will take number 1 lakh 1. Second purchase invoice 1 lakh 2 or 100,000 2. When you post the third purchase invoice, it will take 100,000 2. 100,000 3 and so on. When you post the first payment to vendor, the system will take 2 lakh 1. Second payment to vendor, 2 lakh 2. Third payment to vendor, 2 lakh 3. Like that, for the individual document types, the system will take the numbers from the defined number ranges. That's why for each document type, we have to define the number ranges. Right? Here, our first module is general ledger accounting. Probably we start the general ledger accounting next Wednesday or like that. Okay. So our first module is why at this point of time we define the number ranges for document type SCA. For KR, KZ, KA, we define the number ranges in accounts payable. For DR, DZ, DA, we define the number ranges in account receivable. And for AF, we define the number ranges in asset accounting. Now, what is the serial number? This serial number, I will explain you. The impact of the serial number. No, you cannot differentiate with the month, right? For that, system automatically uses one number, right, which is called reference number. So with the help of the reference number, you can identify the business transaction to which month it is related. I will show you what is that reference number at the time of posting the transactions. So for the serial number, for the document type SCA, we have the serial number 01. For document type KR, we have the serial number 19. So what is this document type? What is the serial number? This I will explain you at the time of doing the setting. So let us do the setting, and some other things are also there. Those things I will explain you after doing the setting. See the material, please. See, creation of number ranges for document type SCA means general ledger document. Transaction code OBBO 7. Now, so these are the document types which are already defined in the system, right? See the material, please. Click on position. This is called position button. Document type is equal to SCA. Document type is equal to SCA. Click on enter. Select the document type SCA. When you click on enter, the document type SCA is taken the first line. So select the document type SCA. Selecting means beside the document type SCA, you have one empty box, right? Click on that. That is turned into yellow. Means it is selected. Click on details button. See, document type SCA, number range number 01. This is called number range number. So in the system, for the document type SCA, 01 was assigned. Similarly, for the document type KR, 19 was assigned. See, for example, see, for KR, 19 was assigned. So that's why serial number we have taken 01 for SCA. So for SCA type document, 01 was linked here. Okay. What is the use of the serial number? We will see. Now, observe the number range number 01 in the properties. Click on number range information. This is called number range information. Then company code is equal to 3366. Company code is equal to 3366. Click on change intervals. This is called change intervals. Then in your material, after clicking on change intervals, click on insert intervals button is there. It's not click on insert intervals. Click on insert line. Click on insert line. This is called insert line button. Click on insert line. Number is equal to 01. Number is equal to 01. Year is equal to 2017. Year is equal to 2017. Means this number ranges are applicable to the year 2017 only. So next year we have to use the new number ranges. For that, what we do is at the end of every year we perform some year closing activities. As a part of year closing activities, you copy the user copies the number ranges from the previous year. So how to copy the number ranges from the previous year, we will discuss as part of our year closing activities. Year is equal to 2017. From number 1, to number 1 lakh. From number 1 to number 1 lakh. Just like that, I'm using 1 to 1 lakh in our class. Now, NR status. Look at the screen, everybody, please. NR status. NR means number range status. NR means number range. So NR status means number range status. With every document you post in the general ledger, the system automatically updates this field. Suppose if the user notices the NR status is 100, it means he can understand that 100 business transactions have been posted in the general ledger. That is the meaning of NR status. Then click on save. Click on save and click enter on the message. Now look at the screen. Here we have assigned the number ranges 1 to 1 lakh to the number range number 01. We have linked 1 to 1 lakh number range values to the number range number 01, right? And this number range number 01 was linked to SA type. So this 1 to 1 lakh is applicable to SA type document through number range number 01. That is the significance of the serial number. Clear? Now, let us discuss some other points. See, the standard system is delivered with the document types which can be used, changed, or copied. Then, the document types are defined at a client level and are therefore valid for all the company codes. Then, the number ranges for document types are defined at the company code level. So, here you have to understand that client level means group level. So, the document types are defined at a group level so that all the company codes of that group can use the document types. But the number ranges for document types are defined at the company code level. Means whenever an object is defined at a company code level, that object is specific to that company code only. What is this? Please put heading in the notes. I will explain you. Put heading in the notes. Note. Note. You can say note number 1. Note number 1. When an object is defined at a client level, within brackets group level, that object can be used by all the company codes of the client. Next, note number 2. When an object is defined at company code level, then that object is specific and available specific and available to that company code only. Means what? What is the advantage of this? Here, the document types are defined at client level. Means these are the document types are defined at a client level. So whenever you define an object at the client level, that can be used by all the company codes of the client. Client means here you have to understand as group. For example, we have ABC group. So in ABC group, you have three company codes: A company code, B company code, and C company code. In all the company codes, document type SA is same. Means in all the company codes, document type SA represents general ledger document only. Clear? But the number ranges for document types are defined at a company code level. Means, see, even though the document type SA is same in all the company codes, but in A company code, for the document type SA, 1 to 1 lakh is enough. But in B company code, 1 to 5 lakh is required. And in C company code, 1 to 10 lakhs is required. Because B company code is bigger than A company code and C company code is bigger than B company code. Even though the document type SA is same in all the company codes, but for same document type SA, we may have to have a separate number ranges in every individual company code, right? That is the advantage of this. So through it's a principle, you can remember that, right? When an object is defined at a client level, that object can be used by all the company codes of the client. When the object is defined at a company code level, that object is specific and available and applicable to that company code only. That is a rule you have to remember. Now, throughout our FI classes, we are going to define number of objects. In that case, how do we know which object is defined at a client level and which object is defined at a company code level? Very simple. I will tell you one more principle. Please remember that. Continue the notes. Next paragraph you can see. At the time of defining the objects, if the system asks for the company code, if the system does not ask for the company code while defining the object, if the system does not ask for the company code, then we can assume that the object is created at a client level and it can be used by all the company codes of the client. But at the time of creating the object, if the system asks for the company code, then we can assume that that object is created at a company code level. That object is created at the company code level. In that case, that is applicable to that company code only. In that case, that is applicable to that company code only. See here, look at the screen please everybody. Here, I told you that we can define our own document types, right? Now, one more principle in SAP is, in any screen, if you notice the new entries button, then you can assume that you can create that object on your own also. You can create your own objects also, right? Suppose, in document types, we have new entries, right? Means we can create our own document types. If you click on new entries, in this screen, you provide some values for creation of document types. Nowhere it is asking for the company code. See, it's not asking. There is no company code field in this screen, right? Means this document type is created at a client level, so it can be used by all the company codes of the client. Now, at the time of defining the number range of a document type, see, it is asking for the company code. At the time of defining the number ranges for document type, it is asking for the company code. So whatever the numbers you are going to enter in the next screen will be applicable to this company code only. This is very important point we have to remember. Then one more point here is, see, every year we have to define the new number ranges. Means for that purpose we copy from the previous year number ranges. Then, for example, yes, exactly, Himasailaja. Sorry, Teja, you are right. Now, here, I got one doubt here. Like what? For SCA, we defined 1 to 1 lakh. This is for the total year. By September, total 1 lakh numbers are exhausted. You have posted total 1 lakh number of documents by 30th September. But still, there is 3 months more. So unless you don't have the number ranges, you cannot post the transaction. Then what to do? So that's why at the time of defining the number ranges itself, please remember, at the time of defining the number range itself, right, you keep the buffer, a sufficient buffer for each document type. For example, for SCA, 1 to 1 lakh you have defined. Then for KR, you start with 10 lakhs one or 1 million one. So whenever the number range is over, you can add from the leftover buffer. So this we have to follow everywhere. We can't help it. So this is the concept of document types and number ranges. So remaining things we will see on Monday. Monday means Indian day, Tuesday, USA day, Monday. USA day, Monday evening, Indian day, Tuesday morning. Akila, you have any questions? Okay. Anil? Okay. Sekar?
No, sir.
Okay. Gadi? We see if the buffer is also exhausted, right? You can use the number from the last number of your AF document type. In that case, your serial is disturbed, nothing else. Himasailaja, you have any questions? Himasailaja, any questions? Okay, okay, Gadi. Manoj, Roni, okay, Srinivas,
Yes, sir.
okay,
Hello.
Sunil.
Hello. Sir, I have doubt, sir. Hello.
Yeah, tell me, Srinivas, your voice is low. Can you come closer to the speaker? I'm sorry, mic.
Okay. Okay, sir. Sir, now is it clear?
Yes, yes.
Hello.
Yes,
Okay.
clear.
Sir, right. I have doubt with the chart of accounts. Sir, for a group company, we have two company codes. Hello. Hello.
Do one thing. Call me, Srinivas. Call me after the class.
Okay.
There is a lot of disturbance.
Right. Okay.
Sunil, any question? Yeah, I will send you, Roni. Sunil, you have any questions? Gadi, can you please mute yourself? Sunil, you have any questions? Sunil, I gave you one private message. Just look into that message. Teja, you have any questions? Okay. Okay, then see you on Monday, USA Day, and Tuesday, Indian Day. See, today we have to start. Sunil, can you please mute yourself?
Sir,
Yeah, Sunil.
sir, I'm Himsela, sir.
Yeah, Himasailaja, tell me.
When I'm doing the practice of when I assign a company code to the company, it is showing an error message like it is showing the error message. The entry 2810 RJ does not exist in T8880. It is showing, sir.
1 second. I'm just logging into the system.
Okay.
You are assigning company code to company, right?
Yes, sir.
What's your company code?
2810.
2810. RJ Electronics, right?
Yes, sir.
Okay. What is your company?
RJ Electronics, sir.
No. Company name. What is the identification you have given in the first step? If you press on F4,
F4. Not able to.
so your group is not there. You did not define the group.
Okay. Could you please show me this, sir?
How to create a group? Huh?
Yes, sir.
Huh?
Yes, sir.
Okay. See, SPRO, enterprise structure, definition, financial accounting, define company.
Yes, sir.
So this is the first step in your material, Himasailaja. This one.
Yes, sir.
So you did not do this step, it seems. Straight away, you have gone to step number 1.2. Okay.
Okay.
So what?
You know, sir, no, sir, I did that. 1.1 also I did. Sir.
And what is the identification? What is the identification you have given for the company?
RJ Group. I gave it as
No.
RJ Group.
That is company name. Company identification I am talking about.
2810 only, sir.
2810.
Yes, sir.
Then RJ group, right?
Yeah.
City New York, country US, language EM, currency USD. Click on save. See, it did not create. Otherwise, you might have forgotten, right? So, if you have created, the system should have given this error message and entry already exists the same key.
Okay, 2810. Sir, I gave 2810 as the data.
You
2810 RJ I gave.
okay? Let me check. 2810 RJ.
RJ group of companies.
This is also useful for others also, right? Sometimes you may get these errors because sometimes you might have forgotten to save the objects. This was also not there because it was saved now. The thing is, you might have forgotten. That's only the reason. You might have forgotten to save. You have given
Okay.
all the information, but you might have forgotten to click on save. That is the reason why it is not able to find it there. Now in the assignment,
Okay, sir.
yeah, 1 second, I will show you. In assignment, now you can find it. So if you press on F4, you can see your company there now. See, 2810 RG group of companies, right? Then
Yes, sir.
you can see here, just now we have created, no? That you can see here.
Yes, sir.
In the previous case, you might have forgotten to click on save, nothing else.
Okay.
Here see 2810 RJ. Two companies we have created, no? These two companies we can see here. Yeah. Now, coming to the current topic. Jarisha, please mute yourself. I mean, Himasalija. Yeah. See, definition of tolerance groups for GL accounts. So first I will explain the concept of tolerance groups for GL accounts. See, tolerance groups for GL accounts, setting the maximum limits equal to which or below which the differences in the balance sheet GL accounts are automatically taken to the profit and loss account or some predefined account like sundry balance or written off account. Again, I'm repeating, observe it carefully. Setting the maximum limits equal to which or below which the differences in the balance sheet GL accounts are automatically taken to the profit and loss account or some predefined account like sundry balances written off account. Means, so before going to understand the tolerance group for GL accounts, we have to understand one more concept, open items. Open means pending. Open items means pending items. So this pending item concept is applicable to vendor accounts, customer accounts, and some balance sheet GL accounts. So what is the concept of open items for vendor accounts? Open means pending items, I told you. So today we purchase a material from a vendor and he has given 30 days credit. So when do we make the payment to vendor on this invoice? On 30th day. So till you make the payment to vendor on this invoice, the system will display this purchase invoice in the red color, informing you that this invoice is pending for payment. That is called open item. Now, on 30th day, we have made the payment to vendor. Then the system will turn this red color invoice into green color. That is called cleared item. So I will show you the open item and cleared items relating to vendors in accounts payable. Then coming to open items to customer accounts. Today we sold some goods to a customer and we have given 15 days credit. So obviously the customer makes the payment on 15th day. So till you receive the payment from the customer on this invoice, the system will display this invoice in the red color again, which is called open item. So this is the information to the user that we have sold goods to the customer on this invoice and we have not yet received the payment. That invoice is pending for receipt. So open means basically pending. So when we receive the payment from the customer on 15th day, the system will turn that invoice into green color. That is called cleared item. So again, I will show you the open item and cleared item relating to customers in accounts receivables. At this point of time, we have to understand the concept of open items relating to GL accounts. So this concept of open item is not applicable to all the GL accounts. It is applicable to some of the balance sheet GL accounts. What are those balance sheet GL accounts? Outstanding expense account, outstanding incomes account, prepaid expense account, incomes received and advance account. So these are the 4 GL accounts to which this open item concept is applicable. Means what? Here, let me change the date. 10th October. Now, here we always follow the concept of accrual accounting. So what is the accrual concept of accounting? What is the accrual concept of accounting? Here, the main purpose of accounting system is to find the business results, right? So periodically, how much profit you have done, how much profit you have earned. That is the purpose of accounting system. So every month we want to find the profit. So how do we find the profit every month? We have to compare the revenues of the month with the expenses of that month. Then only we can find whether we have incurred profit or whether we have incurred loss. So in order, again I'm repeating, in order to find the profit in a particular month, we have to compare the revenues of that month with the expense of that month. Then only we can find profit or loss. But there are some expenses which are incurred in the current month but paid in the next month. There are some expenses which are incurred in the current month but paid in the next month. Now, for example, you take September. September rent is paid on 1st of October. October rent is paid on 1st of November. Similarly, let us assume that the salaries are paid on 1st of every month. In that case, salaries of October are paid on 1st of November and the salaries of November are paid on 1st of December and so on. Okay, let us assume that we are preparing P&L account as on 31st October 2017. So as on that 2017 31st October, we have incurred salaries, we have incurred rent, but as on 31st October we did not pay. So when you are paying these expenses on 1st November, so when you pay these expenses in 1st November, if you account them on 1st November, what exactly it is meaning? The expenses of October are considered in the month of November. So in that case, if you prepare the P&L account for the month of October, it does not show correct picture of the profit because the expense related to October are accounted in the month of November. That's why as on 31st October, for these expenses which have been incurred but not paid, you post some entries. Those entries are called accrual entries. So we discuss again elaborately regarding this accrual entries at the end of the general ledger accounting. So here on 31st October 2017, I am preparing the P&L account and balance sheet. So there are some expenses which are incurred but not paid. Let us say rent, salaries and commission. So then we post the entry rent account debtor 10,000, salaries account debtor. No, here rent is incurred on 31st October, but it is not paid on 31st October. It is paid on 1st of November. So similarly, salaries were incurred. You have used the services of your employees, But as on 31st October, you did not pay salaries. They are paid on 1st of November. Means the salaries of October are paid on 1st of November and are accounted in the November. Then the salaries of October are not considered in the salaries of October in the month of October, right? That's why if you prepare a P&L account for October, it will not show correct picture of the profit. Clear, Sunil? Yeah. Now, so in order to recognize these expenses in the month of October itself, we post some entries. These entries are called accrual entries. Say rent account debtor 10,000. If you are paying some expenses of the current month, in the next month I am talking, right? Generally, you receive your salaries on the 31st or 30th, right? Just to make you understand the concept, I have taken this example. So, we have incurred rent account, salaries account and commission account, but they are not paid as on 31st October. That's why we post one entry debiting rent account 10,000, salaries account 20,000, commission account 5,000. But did you pay them? No. So there is no concept of cash here. They are debited to outstanding expense account. So if you prepare the outstanding expense account, they are posted to the credit side of outstanding expense account. It seems that somebody has not muted. Anil, can you please mute yourself? Anil, can you please mute yourself? So by virtue of this entry, by rent 10,000, by salaries 20,000, by commission 5,000. So these three line items are posted to credit side. Did you pay these expenses? No, they are pending for payment now. So system will display these three line items in the red color, which is called open item. Clear? Now, on 1st October 2017, you have paid the above expenses. Then we debit outstanding expense account. Then to cash rent 10,000, to cash salaries 20,000, to cash commission 4,800. So according to this entry, if you post these items into the outstanding expense account, they are posted to the debit side. So to cash account rent, to cash salaries 20,000, to cash commission 4,800. And these items are paid items, right? So these items are displayed in green color, which is called cleared item. So this is the concept of open items and cleared items. Now, again, on 30th November 2017, I am preparing the P&L account and balance sheet. Again, I am preparing the P&L account and balance sheet. In that case, you balance this outstanding expense account. On 30th November 2017, you balance this outstanding expense account. What is the total credit balance? What is the total credit side? 35,000. But the debit side is only 34,800. So there is a difference of 200 rupees. Let us assume the difference is in 100 rupees. This is the rupee account. Okay. So there is a difference of 200 rupees. Because the total credit is 35,000, but the total debit is only 34,800 rupees. So there is a difference of 200 rupees. Now, on 30th November 2017, we are preparing the P&L account and balance sheet. In that case, where do we display this 200 rupees difference? Whether in the P&L account or balance sheet? I hope everybody is clear with the question. I am not asking you the answer. What I mean to say is, well, did you understand the concept till now? If anybody wants, just put the message. I will explain again. Okay, perfect. So where do we display this difference of 200 rupees? Whether in the P&L account or balance sheet? It depends upon the reason of this difference. I will tell you two reasons. the person to whom you have provided commission, actually you have provided commission 5,000, but you paid only 4,800. That is the reason why there is a difference. So the person to whom you have provided commission, he came to our office on 1st November exactly at 4:55 evening time. Our closing hours are 5 o'clock. So by that time, the main cashier already has left the office and I am the junior cashier. And at that time, I have only 4,800 rupees. So the commission agent approached me. Then I said, sir, I am having only 4,800 rupees. And the main cashier also has left the office today. Something little bit early. So instead of coming for next day, right, you do one thing, take this 4,800 rupees, okay, and you collect the remaining 200 rupees when you come next time to our company. Obviously, it looks very logical. So the commission agent has agreed. So I have paid 4,800 rupees to him. So for this difference of 200 rupees, the commission agent did not turn up to our company till 30th November. He may come in future. But as on 30th November, he has not yet come to our company for collecting after 200 rupees. That's why still there is a balance of 200 rupees. If this is the reason for this 200 rupees, still there is a liability on our company to make the payment of this 200 rupees whenever the commission agent comes to office. If that is the reason, it is a liability. In that case, it has to be displayed on the liability side of the balance sheet. I hope it's clear for everybody. One more reason I will tell you. The person to whom you have provided commission, he said, sir, in this particular transaction, I am giving, in this particular transaction, please remember, in this particular transaction, I am giving a discount of 200 rupees. Then I felt very happy and I said, okay. So instead of 5,000, I paid only 4,800 rupees. This is the reason for this difference. If this is the reason for this difference, you need not pay, right? It is actually cash discount received. Means it is the revenue. In that case, this difference of 200 rupees is to be transferred to P&L account as revenue. Clear? So based upon the reason for this difference, you may have to transfer it to P&L account or balance sheet. So if you prepare the P&L account and balance sheet manually, as a human being, you know the reason for this difference. As an accountant, you know the reason for this difference. Based upon the reason, you can decide whether it has to be transferred to P&L account or balance sheet. But here, the system itself will prepare the P&L account and balance sheet in SAP. In that case, how the system knows that whether it has to be transferred to P&L account or balance sheet? For that, so how the system knows that whether this has to be transferred to P&L account or balance sheet? For that, we give the instruction to the system with the help of the tolerance groups for GL accounts. See what I written here. Setting the maximum limits equal to which or below which the differences in the balance sheet GL accounts are automatically taken to the profit and loss account or some predefined account like sundry balance return of account. So exactly what we do is, in consultation with the accounts department, we set up the different tolerance groups. For each tolerance group, we set up the upper limit. And these upper limits, we cannot decide on our own. We have to take into consideration the requirements of the accounts department. For example, let us assume that we have defined 4 tolerance groups. Tolerance group A. It's not the miscellaneous receipts, right? Cash discount received or sundry balance return of account. Or you can also take it to miscellaneous accounts. Or you can also take it to miscellaneous receipts account. No issues. Based upon your requirement, it can be transferred to miscellaneous revenues account or miscellaneous expense accounts or cash discount received account or sundry balance return of account. Any account based upon your requirement, accounting requirement, you can take it. Now in this case, we have defined 4 tolerance groups. Group A 150, Group B 100, Group C 200, Group D 250. Now, if you assign, for example, if you assign tolerance Group A in the outstanding expense account master record, at the time of creating the GL accounts, we assign the tolerance groups. Where do we assign? I will show you at the time of creating GL accounts in the general ledger accounting. No, miscellaneous expenses and sundry expenses are same, Chandrasekhar. And see the question posted by Chandrasekhar. Miscellaneous expenses and sundry expenses are same now, or there is any difference? No, both are same. Okay, Chandrasekhar. Now, Gadi. If we face 4,800 out of 500, 200 will be remains as open item only. Yes, exactly. Right, Gadi. So out of 5,000, he has paid only 4,800 rupees. In that case, 200 difference will be shown as open item. Now we are going to discuss how this open item is to be treated. So after creating this tolerance group A, we have assigned the tolerance group A in the outstanding expense account. Let us assume. Then what is the difference in the GL account? 200 rupees. And what is the upper limit of the tolerance group? 150. So in that case, the difference is more than the upper limit. Then the difference is transferred to balance sheet as liability. But if you assign tolerance group D, the difference is less than upper limit. In that case, the difference is transferred to P&L account as revenue. Let us come in the reverse way. It is the policy of the company that in any balance sheet GL account, if the difference is equal to 200 rupees or less than 200 rupees, straight away transfer it to P&L account. In that case, we assign either Group C or Group D in the outstanding expense account. Clear? That's how, with the help of the tolerance groups for the GL accounts, we can control whether the residual balances or the closing balances in this type of ledger accounts are to be transferred to P&L account or balance sheet. And anytime we can change the tolerance groups in the outstanding expense account. So this is the concept of tolerance groups for GL accounts. See, based on the requirements of the accounting department, we define different tolerance groups and we assign them in the respective GL account master records. Based on the limits specified in those tolerance limits, the differences in the GL account is automatically transferred to profit and loss account. Means if the difference in the GL account is less than the upper limit of the tolerance group, the difference is transferred to P&L account. If the difference is more than the upper limit of the tolerance group, then that is transferred to either balance sheet or either onto the liability side or asset side based on the debit balance it is or credit balance it is. Then the limits are applied at account level, not for every transaction level in that GL account. Means the system will consider the difference in the total of the account, not for every transaction level. That system will consider the difference at the account level, not at the transaction level. Then a tolerance group can be assigned in any number of GL account master records. But a GL account master record can be assigned with only one tolerance group. The upper limits can be specified either for debit differences or for credit differences separately. Yeah, you cannot define the prepaid expenses. Prepaid expenses we will discuss in the accrual concept of accounting, right? It is little bit early to discuss this concept of prepaid expenses. We have the separate topic on this accrual expenses, deferral expenses later on. At that time, you can clearly understand. The upper limits can be specified either for debit differences or for credit differences separately. We can define upper limits either in terms of whole amounts or in terms of percentages or both. If both the terms are defined, the system will consider the lower of the two as upper limit and behaves accordingly. It's very, very crucial point. See, we can define the upper limits either in the terms of whole amounts or in terms of percentages or both. If both the terms are defined, the system will consider the lower of the two as upper limit and behaves accordingly. Means, for example, tolerance group A, 150 rupees. This is called whole amount, or we can specify the percentage like 1%. So you can define the upper limit either as whole amount or percentage or both. Suppose for tolerance group A, right, we have defined that the upper limit is 150 and 1%. Both the terms you have defined. So the system will apply 1% on the total of the account. So what is the total of the account? 35,000. 10,000 plus 20,000 plus 5,000, 35,000. On 35,000, 1% is 350. Out of these two figures, which one is lower? 150. So the system considers that the upper limit of the tolerance group is 150. Then the system compares the difference in the GL account with the tolerance group limit 150. So difference is more than 150 and that will be transferred to balance sheet. So this is the concept of tolerance group. And please remember, we can define any number of tolerance groups, and these upper limits we cannot decide on our own. We cannot decide on our own. We have to take into consideration the requirements of the management. Management means here we are accounts, finance and accounts department, right? So this is the concept of tolerance groups for GL accounts. I hope the concept is clear to everybody. If anybody wants any time, I will explain again. Any point, I will explain again. And see the material. SPRO, financial accounting. See the path please. Financial accounting, general ledger accounting, business transactions, open item clearing, clearing differences, define tolerance groups for GL accounts. Transaction code is not there. Add the transaction code. OBA 0. Transaction code OBA 0. See here, if you know the path, we can find the transaction code. Did I tell you this technique in the class? If you know the path, we can find the transaction code. Did I tell you this technique in the path? How to? Okay, I will tell you. First, let us do the step, then again I will tell you. Continue. Transaction code OBA 0. Transaction code OBA 0. Click on new entries and don't write. First look at the screen. I want to define the tolerance group AB like this, right? How to define? First just look at the screen. Company code 3366, right? Tolerance group A. Please don't write. Tolerance group A. Description upper limit 100. Then see tolerances for groups of GL accounts in local currency. Debit posting 100. Credit posting 100. If you want to define percentage also, you can define the percentages here. Click on save. Then I want to define B again. Click on next entry button. Company code 3366. Tolerance group B. Upper limit 150. Debit posting 150. Credit posting 150. Again, if you want to define any percentage, that percentage can be defined here. Click on save. Click on next entry button. Company code 3366. Tolerance group C. Here you can use up to 4 characters. For each tolerance group, you can use up to 4 characters ID. Just like that, I'm using single character. So in that way, you can define any number of tolerance groups, right? Now continue in the material. Now you can write in the material. Company code is equal to 3366. Company code is equal to 3366. Tolerance group blank means keep that field blank. Don't write anything there. I will tell you what is this and why is this. Tolerance group is equal to blank means keep that field as blank. Then name is equal to blank tolerance group for 3366. Blank tolerance group for 3366. Now something is missing there. Write down. Debit posting is equal to 1000. These two fields are missing there. Debit posting is equal to 1000. Credit posting is 1000. Debit posting is equal to 1000. Credit posting is 1000. Click on save. Now, what is the blank tolerance group, right? Here you have some space, no? Please write down here itself. The blank tolerance group is also called the blank tolerance group is also called the blank tolerance group is also called null tolerance group. Null, N-U-L-L, null tolerance group. The blank tolerance group is applicable to all the GL accounts. The blank tolerance group is applicable to all the GL accounts which are not assigned with any tolerance group. Means, suppose for example, you did not assign any tolerance group in the GL account. So in that case, the values of this tolerance group are applicable. So in addition to required number of tolerance groups, generally we also define the blank tolerance group in the implementation. Now, the next one is tolerance groups for employees. This we will see in tomorrow's class. But before that, here, for example, see, for the step number 7.1, tolerance groups for GL accounts, I have given the path, but I did not give the transaction code. I told you, for every screen, there is a path and there is a transaction code. So I have given only path, but I did not give the transaction code. In that case, actually transaction code is OBBO. I told you to write the transaction code, right? OBBO. So if you know the path, we can find the transaction code. How to do that? Please write down in the notes. Put heading note. If the path is given, we can find the transaction code. If the path is given, we can find the transaction code. For example, to find the transaction code, for Definition of tolerance groups. For definition of tolerance groups, for GL accounts. For GL accounts. Procedure. Procedure. Execute the path. Execute the path. For definition of tolerance groups. Execute the path for definition of tolerance groups. Like, write the path. SPRO, SPRO, financial accounting, general ledger accounting, SPRO, financial accounting, general ledger accounting, business transactions, business transactions, open item clearing, open item clearing, clearing differences, clearing differences, clearing differences, define tolerance groups for GL accounts. Define tolerance groups for GL accounts. Means first you have to execute this path. Define tolerance groups for GL accounts. So here also I am executing the path. SPRO, financial accounting, general ledger accounting, business transactions, open item clearing, clearing differences. So you came to the last line in the path. So you have to come to the last line in the path. Define tolerance groups for GL accounts. Okay. Now continue. Go to menu. Go to menu. Additional information. Go to menu. Additional information. Again, additional information. Additional information 2 times. Go to menu. Additional information. Again, additional information. Display key. IMG activity. Display key. IMG activity. Again, I'm repeating, just look at the screen. After coming to the last line in the path, go to menu, additional information. Again, additional information. Then display key, IMG activity. So when you click on like that, the system will add something for every line, right? Now keep the cursor against the activity. Keep the cursor against the activity for which the transaction code is required. For which the transaction code is required. Look at the screen. Here, define tolerance groups for GL accounts. For this only, I require transaction code, right? Keep the cursor here. The last 4 line, the last 4 letters, is transaction codes. The last 4 letters is the transaction code. Look at the screen. The last 4 letters means in this case OBA 0. That's why I told you the transaction code is OBA 0. Continue. This procedure is applicable. This procedure is applicable only in IMG screen. Only in IMG screen. This is one technique, right? Now, Anil has posted one question. Suppose if the tolerance range is lower than the open items at the time, how it shows, for example, you are defining GL tolerance group 400, 500, 600, 700. Okay. But actually the open item will be 2000. See, if the open item is more than the upper limit, that will be transferred to balance sheet. If the difference in the GL account is more than the upper limit, that is the open item is more than the upper limit of the tolerance group, Anil, that will be transferred to balance sheet. If it is the credit balance, it will be transferred to liability side. If it is the debit balance, that will be transferred to assets. Okay, all right. Now, Akila, you have any questions? Okay, Anil. By tomorrow, our basic settings will be over. From day after tomorrow, we start general ledger accounting. Chandrasekhar, okay, Teja, okay, Gadilingam. Any questions?
Sir, I have a question.
Tell me.
In the account groups, you have told that it controls the fields.
Yes.
Will it controls?
Yes.
Like only field status of groups only will control, right?
No. See, the field status for master records. There are 2 types of field status in SAP. Field status for document entry, field status for master records. Field status for master records is controlled by account groups. Field status for document entry is controlled by field status variant. But how the account groups control the field status for GL master records? I did not explain you this concept. This I will show you at the end of the general ledger accounting. Then only you can easily understand.
Okay.
Yeah.
And sir, while practicing, server is disconnecting. It's suddenly lagging out.
See, if you keep the server 10 minutes idle, right, without doing any practice.
Sir, to post all this GL accounts and all, it will take minimum 5. If you practice continuously, also it will be breaking.
No, actually, there may be a problem with your internet because since 1 hour we have been doing the class now in the same server. See, it's not disconnecting.
Okay.
Maybe problem sometimes from the internet.
Okay, sir.
Yeah. Himasailija, you have any questions? Okay. Khalid, any questions?
No, sir. I'm fine.
Yeah. Manoj?
Yeah, I'm good.
Yeah. I have seen your mail, Manoj. I will do it.
Okay, sure. Thanks.
Roni, any questions? Okay. Srinivas?
So, how we consolidate 2 company codes?
This we will discuss later on. It's a separate module. Consolidation is totally a module. It cannot be explained now, right? It takes another 30 days to explain the consolidation. At this point of time, don't go for the consolidation.
Okay.
So actually it is the part of enterprise control. There is one more module, enterprise control. So the consolidation is a separate submodule in the consolidation, in the enterprise control. Lot of settings are to be done for the consolidation. That's why I told you, Anil, right? Don't do the practice while I am explaining the class. Not only for Anil. It's my request to everybody is, don't do the practice simultaneously with me in the class. Don't do the practice simultaneously with me in the class. First listen to the explanation. Once the class is over, then you can do the practice. I will tell you. See the message posted by Anil. Whenever I open some screens, it shows the screen is locked by Lakshman. I will tell you why it is coming and how it can be resolved. Before that, Sunil, you have any questions?
No.
Okay. See, here we have opened the screen tolerance group for GL accounts, right? Now, I'm trying to open one more screen. I'm trying to open the same screen again. Already we have opened tolerance groups for GL accounts. Again, I'm trying to open the same screen. Let us see what happens. This is the message you are getting, Anil, right? Here, what happens is when several users are trying to access the same screen, the system will give the access to the screen to the first user only. For the subsequent users, I request everybody to mute yourselves because I'm getting a lot of disturbance. Not only me, others also feel disturbance in the class. Sunil, can you please mute yourself? Sunil, can you please mute yourself? Yeah, thank you. So this screen is displayed to the subsequent user. When several users or multiple users are trying to access the same screen, the system will give the access to the screen only for the first user. For the subsequent user, the system will give this message. So the dot is locked by user Lakshman and can be displayed only. Do you want to display locked data? If you click on yes, you don't have the new entries button. See? So you don't do anything. You can only display the data. In that case, you have to unlock the screens. Right? So how to unlock the screens? Right now, again, go back to notes. Put heading note. When the message within inverted commas, write down this. The data is locked by user. So and so. Means the data is locked by so and so. Write some hyphens there. And can be displayed only. Inverted commas closed. Is shown by the system. We have to unlock the screen. Procedure. Click yes on the message. Go to the transaction code SM12. Go to the transaction code SM12. Username is equal to enter the name of the user. Enter the name of the user by whom the screen was locked. Means, for example, you got the message that the screen was locked by Tafik, right? In that case, in the SM12 transaction code, you have to enter that username. Suppose if you get the message that the screen was locked by Manoj, in that case, in the username field, you have to enter the Manoj. Okay. Now continue. Go to menu lock entry list. So this is the menu bar, lock entry list. Again write down. Go to menu lock entry, delete all. Go to menu lock entry, delete all. Go to menu lock entry, delete all. Delete lock entries? Yes. Click yes on the message. Click yes on the message. Continue. Close the performance assistant screen. Close the performance assistant screen. Close the performance assistant screen. See, look at the screen. This screen is called performance assistant, right? You close this screen. Click on this, right? Now you will be able to access the screen now. So this happens when multiple users are trying to access the same screen, but it does not happen in the real time, because in the real time, based on the roles of the users, the respective screens are given to access to the users. But in the training class, number of students are accessing the same server, right? And they may be practicing simultaneously. That is the reason why for the first user, the system will give the access of the screen. For the second user, it gives this message. In that case, you have to execute transaction code SM12 and you have to follow the procedure. I hope everything is clear for today. Okay then, see you tomorrow same time. Good night and good day.
I have a doubt, sir.
Okay, can we discuss this doubt at the end of the class?
Sure, okay, sir.
Okay. So, today we have to look into step number 7.2 in the basic settings. Define tolerance groups for employees. So first I will explain the concept of tolerance groups for employees. Just 1 second, let me close all other materials. See, actually, with the help of the tolerance groups for employees, we can control the posting activities of the employees in the finance and accounts department. We can control the posting activities of employees in the finance and accounts department. So what are the tolerance groups for employees? Setting the maximum limits for the posting procedures of employees. Posting procedures means posting activities. So what are the posting activities? So here, as far as postings are concerned, the lower level employee has to do some postings. So for each posting, we set up the upper limit. So what are the posting activities? Number 1, the amount of document an employee can post in GL accounts, vendor accounts, customer accounts, and asset accounts. Means you take any employee. As far as postings are concerned, they have to post a business transaction either in the GL accounts or vendor accounts or customer accounts or asset accounts. So this is one posting activity. So actually what we do is we define number of tolerance groups, like for example say group A, group B, group C, group D. So under every tolerance group, you set up the upper limit for all the 4 posting activities. So the first posting activity is the amount of document means business transaction. The amount of document an employee can post in GL accounts, vendor accounts, customer accounts, and asset accounts. For that activity, you set up this upper limit of 1 lakh under group A, 2 lakhs under group B, 3 lakhs under group C, 4 lakhs under group D. You can define any number of tolerance groups again. Now, second posting activity, the amount of open item he can deal with. Open item means the pending purchase invoice and the pending sales invoice. So on the pending purchase invoice, you make the payment to vendor, and on the pending sales invoice, you receive the payment from the customer. So whether you receive the payment from the customer and whether you make the payment to vendor, that is to be posted by the employee only, no? That is called dealing with the open item. So for that activity, you set up the upper limit like this. Under group A, 1,50,000. Under group B, 2,50,000. Under group C, 3,50,000. Under group D, 5 lakhs. Now, the third posting activity, the amount or percentage of cash discount he can offer or post. Means here you receive the cash discount and you pay the cash discount. Suppose for example, when you make the payment to vendor in a stipulated time, suppose one vendor is there and he said if we make the payment in 1 month, he will give us 3% cash discount. So we have done the payment to vendor in 1 month itself. So we have to get the 3% cash discount. This is called cash discount received. So this cash discount received is also to be posted by the employee only. And sometimes you may have to give the cash discount to customers. Suppose one customer is there, while selling the goods to him, we said that if he makes the payment in 15 days, we will give him 2% cash discount. So the customer has done the payment in 15 days. So we have to give the cash discount to him. This is called cash discount paid. So this cash discount paid is also to be posted by the employee only. So whether it's a cash discount received or cash discount paid, that is to be posted by the employee only. So for that activity, you set up the upper limit like this again. Under group A, 0%. Under group B, 1%. Under group C, 2%. Under group D, 5%. Then fourth posting activity, the amount of the payment difference he can accept. So what is the payment difference here basically? For example, one customer is there. For him, we sold goods worth of $10,000. And today, he has made the payment of $8,000, saying that the remaining $2,000 he will pay later on. So this $2,000 is called basically payment difference. So again, this payment difference is to be posted by the employee only. So up to how much payment difference he can accept? Under group A, 1,000. Under group B, 2,000. Under group C, 4,000. Under group D, 5,000. Like that, for all the 4 posting these are only the 4 posting activities. For all the 4 posting activities, under each group, you set up the upper limits like this. And these upper limits, we cannot decide on our own. We have to take into consideration the requirements of the finance and accounts department. Now, there are some employees who are concerned with our finance and accounts department. Let us say group 1. Under group 1, we have junior accountant, junior cashier, and accountant. Then under group 2, we have the accounts officer, senior accounts officer. Under group 3, we have manager finance and senior manager finance. Then under group 4, we have GM finance and director finance. So these are the employees who are concerned with the finance and accounts department. Okay. Now, for every employee, the user IDs are created and given by basis consultants, right? Now, after creating these tolerance groups, the FI consultant will assign the required tolerance groups to the required employee user IDs. As a result, the upper limits of those tolerance groups are automatically applicable to those employees. For example, Group A is assigned to Group 1 employee user IDs. Group B is assigned to the user IDs of accounts officer and senior accounts officer, Group 2 employees. Group C is assigned to user IDs of the Group 3 employees, and Group D is assigned to user IDs of these employees. Okay. Now, as a result, the limits are applicable to the respective employees as far as postings are concerned. Means, here, when the Group A is assigned to user IDs of Group 1 employees, either the junior accountant or junior cashier or accountant can post a business transaction in the GL accounts, vendor accounts, customer accounts, and asset accounts up to an amount of 1 lakh. Up to an amount of 1 lakh. Then, junior accountant, junior cashier, and accountant can post either payment made to vendor or payment received from the customer up to an amount of 1,50,000. And these employees, junior accountant, junior cashier, accountant, cannot post any cash discount paid or any cash discount received because their allowable percentage is 0%. And these people can post the payment received up to a payment difference of 1,000. So like that, these limits are applicable to these employees, and these are applicable to these employees, and these are applicable to these employees. Now, always the postings are to be done by the lower level employee only, right? Now, today we received one material. We purchased some material from a vendor and whose invoice amount is So today we purchased some raw material from a vendor and whose invoice amount is $3,75,000. So this purchase invoice is to be posted by the user in the vendor accounts. So by whom this 3,75,000 purchase invoice is to be posted according to tolerance limits? Group D tolerance group, right? So 3,75,000 is below 4 lakhs. That is Group D tolerance group. The Group D tolerance group is assigned to GM Finance and Director Finance. So technically speaking, this purchase invoice of 3,75,000 is to be posted by the either GM Finance, General Manager Finance or Director Finance. And GM Finance and Director Finance will enter the business transactions to accounting system? No and never. Whatever may be the amount of business transaction, they are to be posted by the lower level employee only. In our case, whatever may be the amount of business transaction, it has to be posted by either junior accountant or junior cashier or accountant. But what is their allowable limit? Only 1 lakh. But the amount of the business transaction is 3,75,000. Technically speaking, they cannot post. But still, it has to be posted by these people only. That's why, suppose junior accountant is going to post that purchase invoice, right? So in order to post that purchase invoice of 3,75,000, this junior accountant has to get the approval either from GM Finance or Director Finance. The junior accountant has to get the approval either from GM Finance or Director Finance. So for that purpose, this junior accountant will enter this invoice into SAP system. Then he will keep it pending for posting. Then the GM Finance will access that document and he will push one button. Then it is automatically posted. This process is called parking and releasing. So how to park a business transaction and how it is released by the next higher level employee, that we will discuss in the general ledger accounting. So at this point of time, what you have to understand is what is the concept of tolerance groups for employees and how the employee postings are controlled by tolerance groups. This is the concept of tolerance groups for employees. I hope it's clear to everybody. And we can define any number of tolerance groups. Just in our example, I have given only 4 tolerance groups. And see the material. Path is same as above. Transaction code is not there. Transaction code OBBO4. For step number 7.2, transaction code OBBO4. So first let us log in. SPRO, financial accounting, general ledger accounting, business transactions, open item clearing, clearing differences, define tolerance groups for employees. Click on new entries. Don't write now, just look at the screen. Suppose if you want to define the tolerance groups as per our example, right? Group is equal to A. See, upper limits for posting procedures. Amount per document, 1 lakh, first limit. Amount per open item account item, 1,50,000. Cash discount per line item, 0%. Permitted payment differences, 1,000, again 1,000. Click on save. Click on next entry button. Enter the group B, give your company code and enter the upper limits of respect to tolerance group. Click on save. Again click on next entry button. Like that, in that way you can create any number of tolerance groups. Right? Now continue. Group is equal to, now you can write in the material. Group is equal to blank, means keep it blank. Company code is equal to 4466. I'm sorry, 3366. Company code is equal to 3366. Then upper limits for posting procedures. Amount per document is equal to, give some 10 or 9 nines. I will tell you why. So maximum amount you give, amount per document, give some 9 nines or 10 nines. Then amount per open account item, again you enter some 10 or 9 nines. Cash discount per line item, 5%. Click on save. So why I have given this much amount? Because in the next step, this blank tolerance group we are going to assign to our user ID. So from general ledger accounting onwards, you start doing the postings. At the time of postings, you have to give the amount columns. So in that case, you can post the amount up to this amount. You can use the amount columns up to this amount. Suppose if you assign group A to your user ID, then what happens? You have to remember those upper limits. Every time when you are posting a transaction or when you are doing the practice, we have to remember those transactions. Sorry, we have to remember those upper limits. In order to avoid that, I told you to give some little big amount. Okay. Click on save. See the next step. Assign users to tolerance groups. I told you, no, the tolerance groups are to be assigned to users. Path is same as above. Transaction code is not there. Transaction code OB57. Transaction code OB57. Click on new entries. Username. I have given the username to every one of you, right? So you enter that username only. Here in this server, my username is Lakshman. So in your practice, you have to enter your username. So write your username there. Tolerance group blank. Click on save. See the error message. An entry already exists with the same key, because for the Lakshman user ID, already blank tolerance group was assigned, because I have nearly 6 batches in this server. So for every batch, in order to log on to the server, I use the same user ID Lakshman. So for the previous batch, I already assigned the blank tolerance group to the Lakshman user ID. But in your case, you don't get any error, because this is the first time you are assigning the user ID. Sorry, this is the first time you are assigning that blank tolerance group to your user ID. But at the time of doing the practice for the second company code, you get the error. Now, see the next step and last step in the basic settings. Global parameters. First, let us do the step, then again I will explain. Okay. Transaction code is OBBY6. Transaction code is OBBY6. Click on position. Company code is equal to 3366. Click on enter. See, our company code has been taken in the first line. Then select the company code 3366. Select 3366 company code. Click on details button. This is called details button. So in this screen, till now, since 2 weeks are like that, we have defined a number of settings, and some settings we have assigned to company code, right? Means we have defined and some objects, and those objects we have assigned to company code. And these objects we can see in this particular screen. See, our company code is 3366. Our company code country is equal to US. Our currency is US dollar. Then language is equal to English. Then we have defined chart of accounts and assigned chart of accounts to company code, right? See here. This is our chart of accounts. We have defined a company and we assigned a company code to company, right? You can see that here. And we have defined fiscal year variant and assigned the fiscal year variant to company code. This you can see here. You defined the field status variant and assigned to company code. This is there. We have defined the posting period variant and assigned company code to posting period variant. See. So all these objects we can display here. In addition to this, right, according to our material, select business area financial statements, select proposed fiscal year, select define default value date, select negative postings permitted. So for every company code, even the real time also, we have to select these 4 checkboxes minimum to minimum. So these are called checkboxes, right? So we have to select these 4 checkboxes compulsory, and other checkboxes we select based on your client requirement. Click on save. Now, what is the impact of selecting these 4 checkboxes? Go back to notes, please. Put heading global parameters. Global parameters. The settings done. The settings done in this activity. The settings done in this activity are applicable to the company code as a whole. Are applicable to the company code as a whole. Number 1, business area financial statements. Under that, number 1, subheading, business area financial statements. Just give me 1 minute. Yes, I am back. Now, business first heading is exactly. So, see the question posted by Teja. These are she has posted one question regarding tolerance groups for employees. So these are control procedures to avoid any fraud or misrepresentation. Yes, absolutely right. Right. So if any wrong postings are done, right, the person who has approved that wrong posting is responsible. That's what I told you. Using the tolerance groups for employees, we can control the posting activities of the employees. That is the main purpose. You are absolutely right. Now, coming to this, put heading business area financial statements. By selecting this indicator, the system allows the user to generate the business area financial statements. Means here, if you want the system to generate the financial statements according to business areas, compulsorily we have to select this indicator. Suppose if you don't select this indicator, the system maintains the business transactions according to business areas in the database. No worries about it. But the thing is, it will not allow us to generate the statements according to business areas. So even though data is maintained in the database according to business areas, unless you select this indicator, system will not allow us to generate the statements. That is the impact of selecting this business area financial statements. Then number 2, propose fiscal year. By selecting this indicator, the system automatically defaults the current fiscal year. At the time of posting the transactions. At the time of displaying the documents. I'm repeating. By selecting this indicator, the system automatically defaults the current fiscal year at the time of displaying the documents. This I will show you after posting and displaying the documents. Next, number 3. Define default value date. By selecting this indicator, the system automatically defaults the current date. Within brackets, system date as value date. This also I will show you at the time of posting the transactions. Now, number 4. Negative postings permitted. By selecting this indicator, number 4, negative postings permitted. By selecting this indicator, we can use the reversal function. We can use the reversal function to rectify wrong postings. To rectify wrong postings. So, how the documents are reversed, how the business transactions are reversed, and how many number of reversals are there in SAP. All these things we will discuss in general ledger accounting. But here, sometimes what happens is, the user may post some wrong business transactions. He may post wrong journal entries, he may post wrong debits or wrong credits, like that. So in order to correct those wrong postings, sometimes you have to reverse. So if you want to reverse the wrong documents to rectify them, here compulsorily we have to select negative postings permitted. So these are the 4 checkboxes that are to be selected for every company code, even in the real time also. Now, what about other checkboxes? I told you they are selected based on the client requirement. Okay, you know client requirement, that's fine. But how do we know which field meets that requirement? I hope everybody is getting my point. Suppose, for example, discount basis net value is there. So, in which scenario, or in order to meet which requirement of your client, we should use this discount basis net value? For that, we should understand the impact of selecting this discount basis net value. But I did not explain you in the class. Then here, it is not possible to explain you every field in the class. But while doing the practice, you can explore the impact of these fields, not only in this screen, anywhere. Suppose I want to know what is the impact of selecting this discount basis net value. In that case, just keep the cursor there, right? Then press F1 function key. F1. So then the system will tell you the purpose of that checkbox. But at the beginning stages, you will not be able to understand what is the impact, right? But once you start doing the practice, at least for 1 month or 1.5 months, then only you start understanding these help documents. See here, indicator, discount base amount is net value. Indicator, with the effect that the sales tax is not contained in the base amount of discount calculation. This is the indicator with the effect that the sales tax is not contained in the base amount for discount calculation. Means what? Let us take one example. See, today we sold some goods to a customer, right? This is the invoice we have prepared. Base amount is equal to $1,000. So base amount $1,000 means this is the price of your goods. So this base price includes your cost of production plus profit. Nobody knows what is your cost of production, what is your profit. Okay. So that is the meaning of base amount or base price. Let us say base price. Now, on the base price, we are charging sales tax 10%. So sales tax is to be added. It's not included in your price. So add sales tax at 10%. So 10% on $1,000 means $100. Then total invoice amount. $1,100. Okay. Now, so this is the invoice amount we sent to customer. Now, we said to the customer, if he makes the payment in 20 days, we will give him 3% cash discount. Now, when the customer has made the payment on 20th day, now we have to give the cash discount to the customer. So here, we give the cash discount to the customer either on base price or invoice price. We give the cash discount to the customer either on the base price or invoice price. Please remember, always we give the cash discount to the customer on the base price. Because here, out of this 1,100 sales invoice amount, $100 is not your revenue. This you are collecting from the customer on behalf of your sales tax department. This $100 you are collecting from the customer on behalf of sales tax department means next month you have to deposit this sales tax to the sales tax government, to the sales tax department. This $100 is not our revenue. This $100 is not going into your pocket as such. Only $1,000 is going into your pocket. So this is actually, logically speaking, whatever the cash discount you give to the customer is to be calculated on this $1,000 only. So in that case, if you select this indicator, the system calculates the cash discount on $1,000, not on sales tax. That is the impact if you select this indicator with the effect that the sales tax is not contained in the base amount for discount calculation. Sales tax is not contained in the base amount for discount calculation. Base amount means the amount on which discount is calculated. That's how you have to understand, right? So with this, our basic settings are over. Now we have to start general ledger accounting. So this general ledger accounting, I did not send you the material yet. So today, along with the recording, I will send you the general ledger accounting material, okay? And take the printout and make it ready for the tomorrow's class. Akila, you have any questions? Okay. Anil. Okay. Chandrasekhar. Gadi. Yeah, Chandrasekhar, tell me, any questions? Oh, okay, okay. Gadi. Okay. Then Himasailaja. Himasailaja, you do one thing. Please change your name. Once you log into the meeting, you can change your name like this. Here in the GoToMeeting interface, right? On the top of this GoToMeeting interface, you will have one GoToMeeting downward arrow, right? So if you click on this downward arrow, you get one option, edit your name and email, right? Click on downward arrow, then the first option. By clicking on the first option, you can change your name, right? Now, any questions now? Himasailaja? Khalid? Khalid?
No, sir.
Okay. Manoj?
I'm fine.
Okay. Roni? Okay. Srinivas?
Sir, hello.
Yeah, tell me, Srinivas.
Sir, in OBBO, what is the meaning of document per line item and open item? One second.
Document per line item means, see, amount per document means amount of the business transaction you are posting. Amount per document means amount of the business transaction you're posting in a document, including all debits and credits. Then amount of operator means pending purchase invoice and pending sales invoice. On the pending purchase invoice, you make the payment to vendor, and on the pending sales invoice, you receive the payment from the customer. In that case, whether it is the payment paid or payment received is to be posted by the employee only, no? That is called dealing with open item. Clear, Srinivas, or not?
Sir, if I give amount per document 1 lakh, so I can't post more than 1 lakh.
Exactly.
Okay.
You are right.
And like that, the open item, amount per open item, if I give here as a 1 lakh, so I can't keep open item more than 1 lakh.
You cannot do.
I can't maintain open item more than 1 lakh.
Not maintain open item. See, if you give the 1 lakh there, you cannot post payment to vendor more than 1 lakh. You cannot post receipt from customer more than 1 lakh. You can maintain any amount of open item, but you cannot post it. You cannot post
more than 1.
Yes. You cannot post receipt of sales invoice amount and payment of purchase invoice amount to vendor. You cannot post more than that amount, not maintaining.
Okay, sir. Clear.
Then Sunil, any questions? Then Teja, tell me, what's your question?
Yes, sir. On the tolerance level for GL accounts, I'm not sure I follow that because do we do it in realistic scenario for all the companies?
Sorry?
And the open tolerance for open items, setting up tolerance level for open items.
Yes.
When there are any open items.
You are talking about tolerance.
Yeah, okay. Yeah. So if there are any open items, what businesses do is they do clear it. No, then why do we need the tolerance level? I'm not understanding that. Even if there are small differences, that will go to miscellaneous receipts of payment only. No, why should it automatically go to P&L?
Do one thing. I think yesterday recording I did not send you. It seems.
Yeah.
Right. I will send the recording today. Right? I've forgotten actually to include your name in this mail group. So I will include you today. So from today onwards, I will send you all the recordings, and the previous recordings also I will send you. Okay. So please listen to yesterday's recording. Then you can clearly understand what exactly is the GL account tolerance groups. Okay.
Okay, sir. So one more question.
30 minutes to explain you all this process.
Okay. So, we are talking about setting up a tolerance group for employees.
Okay.
So, is this for how long it is set up? It is permanent setting at the
yes,
when
it's
we
a
do the SAP setup.
It's a permanent setting, and generally it's a permanent setting. But any point of time, you can edit them.
Okay. But they will have to reach out to the SAP consultants to do all the changes, setting changes.
No, not like that. What happens is there is one more user, super users. Super user, principal users. So they are nothing but FI team leaders. Right? So they have the authorization to IMG screen. Okay?
Okay.
So they can change, but not the employee himself. Because once the implement is over, for everything we cannot ask consultant, because using the consultant services are very expensive. Right? That's why generally once the implementation is over, right, or during the phase of implementation, the consultant will provide the training to the end users. End user means here principal users or the key users. So these principal users are as good as consultants, as far as the level of knowledge is concerned of their respective modules. Okay, so these people can do the can edit the settings. For example, see, I want to change my tolerance group blank, right? OBA4. You go to your OBA4, click on position. You give your company code 3366. Then select this company code. Then click on details. So you can change it. You cannot change the currency, company code and group name. You can change the amount limits.
Okay.
Clear?
Okay, sir.
Yeah.
Yeah.
Okay then. See you tomorrow same time. Good night and good day. See, today we have to start the general ledger accounting. And I have sent this material to all of you. See here, this general ledger accounting is called main ledger. The general ledger accounting is called main ledger. One second. Because the total information you require to prepare your P&L account and balance sheet is available in the general ledger accounting only. So without general ledger accounting, there is no any other module. And again, in financial accounting, we have some other sub-modules like accounts payable, accounts receivable, asset accounting, travel management, balancing ledgers. Like that, we have many other sub-modules in the financial accounting. So each sub-module of financial accounting is integrated with this general ledger. For example, accounts receivable is integrated with the general ledger. And accounts payable is also integrated with the general ledger. Asset accounting is also integrated with the general ledger. So for the purpose of preparing your balance sheet, we require sundry debtors, which is taken from account receivable into general ledger. Then we require sundry creditors, which is taken from accounts payable into general ledger. Then we require asset balances, which are taken from asset accounting into general ledger. Like that, every submodule in SAP of your financial accounting is integrated with the general ledger. Not only submodules of financial accounting, there are other modules in SAP like HR, MM, SD, PP, QM, project systems. Like that, we have many other modules in SAP. And these modules are also integrated with the general ledger. So, what is the result of integration? When these modules are integrated with the general ledger, what is the result? Here, each module is used to manage and to process the business transactions in one department. Each module is used to manage the business transactions and process the business transactions in respective departments. Suppose if you use SD, that is used to manage and process the business transactions in the sales and distribution department. If you take MM, it is used to manage the business transactions in the purchase department. Like that, each module is used to manage the business transactions in a particular department. So, when these modules are integrated with the general ledger, what happens is, in every department, daily some expenses are incurred, some revenues are derived. And whenever these expenses are incurred and revenues are derived, they are posted by the respective end users of the respective departments. Through the process of integration, these expenses and revenue accounts are updated in the general ledger. So in the general ledger accounting, you maintain the GL account for every expense account, for every revenue account, and for every balance sheet account. So as a result of integration, the total expenses and revenues of your entire enterprise are available in the general ledger accounting. So from the general ledger accounting, we can draw the balance sheet and profit and loss account. That's why this general ledger accounting is called main ledger. Now, all the modules within this pink color box. These are FI submodules. And outside this pink color box, you have MM and SD. Means they are separate modules like FICO. SD is integrated with the general ledger accounting or financial accounting through account receivables. Then metals management is integrated with the general ledger through accounts payable. So we are going to look into how MM and how SD is also integrated with the general ledger. So that's why this general ledger accounting is called main ledger. Then for the purpose of controlling, all the information is also taken from general ledger accounting only. This is the total overview of SAP modules. The total structure of SAP R3 is 6.0 software. So in our class, how do we proceed from now onwards is, in every module, first we have to maintain the master data. Without master data, we cannot process even a single business transaction in any module. So once we maintain the master data, we will see how the business transactions are processed, how the entries are posted. That we will see. Once the transaction processing is over, then we will see how the accounts are to be reconciled and how the accounts can be analyzed. After that, what are the periodic processing activities at the end of every month? In each module, we have to perform some month closing activities. So what are those month closing activities? We will discuss once the account analysis and reconciliation is over. Then once the periodic processing activities is over, periodic processing activities is month-end activities. Once the month-end activities are over, then we will see what are the reports available in that particular module. So in the general ledger accounting also, so this process we follow, this sequence we follow in every module. Then in the general ledger accounting, first we have to maintain the master data. So what is the master data? For the understanding purpose, general ledger master data is nothing but your ledger account, rent account, wages account, salaries account, etc., etc., etc. They are called master records. But from the technical point of view, we have to understand what is the meaning of the master data. See, there are two types of data. Number one, master data. The data which is permanent in existence is called master data. The record which contains the master data is called master record. And the master data is again and again used during the processing. The data which is permanent in existence is called master data. Now coming to second one, transactional data. It is the data which is posted to the master record during the daily management of the business, and this is temporary in existence. Means what? Let us take one example and let us try to understand. See, for example, this is a rent account. So the name of the GL account is rent account. Then I told you that in SAP, every GL account is identified with a number, right? So let us say that number is 400, 300. Okay. Then this rent account is maintained in US dollar. So like that, you maintain some permanent data in the GL account master record. For example, if you take a rent account, the name of the GL account is same throughout the life of the enterprise. And this rent account is identified with the number 400, 300, and this is also same throughout the life of the enterprise. and this account is maintained in US dollar. So this is also same throughout the life of the enterprise. So this is called master data. Whatever the data which is permanent in existence is called master data. Now let us assume that every month rent is 5,000. Every month rent is 5,000. So on 1/1/2017 you have paid and posted to bank 5,000. Then on 1st February 2017 you have paid and posted 5,000. Again on 1st March 2007, it is the Indian format date. And on 1st March 2017 you have paid and posted 5,000. On 1st of April 2017 you have paid and posted 5,000 rent. So like that, this rent account will be posted. This rent account will be posted with the 12 business transactions during the year. So these 12 business transactions are called transactional data. So these are the transactional data, means the business transactions which are posted into the master record during the daily management of the business. And this transactional data is always temporary in existence, because for example, if you take a rent account, at the end of the year, all the business transactions posted into this rent account are totaled, and the total is transferred to P&L account by making the balance of the rent account zero on 31st December 2017. So from 1st January 2018 again, the rent account will be accumulating the fresh transactional data. This is the case in the case of P&L accounts. But in the case of balance sheet, the transactional data is transferred to next year in the form of opening balances. That's why the transactional data is always temporary in existence. I hope it's clear for everybody. So first of all, you have to maintain the master data for the GL account in the general ledger accounting. So here the GL account master record contains the data under two segments. The GL account master record contains the data under two segments. Number one, chart of account segment. Number two, company code segment. In each segment, you maintain some data. For example, in the chart of account segment, you maintain the GL account number, GL account name, account group, short text and long text. This is only the data. Please remember, this is only the data which is maintained in the chart of account segment. But in the company code segment, you maintain lot of data. Some of the data is like this: account currency, line item display, sort key, field status group, open item management, etc. etc. You maintain lot of the data in the company code segment. So when several company codes are using the same chart of accounts, the data maintained in the chart of account segment will be same in all the company codes. This is what I told you at the time of explaining your chart of accounts. When several company codes are using the same chart of accounts, the chart of account segment data will be same in all the company codes. For example, I told you that GL account number, GL account name, account group, etc. will be same in all the company codes when they are using same chart of accounts. The reason is that is the data which is maintained in the chart of account segment. Okay, now logic is clear now. Now here the company code data is specific and available to every company code. The company code data is specific and available to every company code. Means, what is the advantage of dividing this data into chart of account segment and company code segment? Let us take one example. You have two company codes. You have two company codes, A company code and B company code. Okay. Then both the company codes are using the same chart of accounts. Let us assume. In that case, both the company codes have taken the term loan from HSBC Bank. Then in both the company codes, you have to maintain the GL account, no? So in both the company codes, the GL account name, HSBC term loan account is same, and the GL account number is same, and the account group, secured loans, right? Term loans means secured loans. So account group will be same in both the company codes. So that's why it is enough if you maintain this data only once. When several company codes are using the same chart of accounts, it is enough if you maintain the chart of account segment data only once. That is shared by all the company codes. Now, coming to company code data, I told you that company code data is very specific and available for that company code only. What is the implication of that? Even though both the company codes have taken the term loan from same HSBC bank, A company code has taken the term loan in Indian rupees and B company code has taken the term loan in US dollar. Now, account currency field is there. Account currency means the currency in which the GL account is maintained. Now, the chart of account segment data is same, but when it comes to company code data, in A company code, account currency will be INR. Because in A company code, you have taken the term loan in Indian rupees. But in the B company code, the account currency will be US dollar. Because you have taken the term loan for in the B company code in terms of US dollar. So the company code data is specific to that company code only. Now, what is the advantage of this? Suppose you have 10 company codes and all the 10 company codes are using the same chart of accounts. And all the 10 company codes have taken the term loan from same HSBC bank. In that case, account name will be same in all the 10 company codes, account number will be same in all the company codes, account group will be same in all the company codes. That's why it is enough if you maintain this chart of account segment data only once. That can be shared by all the company codes. Otherwise, what happens? You have to maintain the same data 10 times in 10 company codes, which leads to data duplication in the database. Clear? That's why SAP divides the GL account master data into two segments, chart of account segment and company code segment. Please remember, chart of account segment data is same in all the company codes using the same chart of accounts, and the company code data is specific to that company code only. Then we can create the... Yes, please.
So is it wise to use a limited number of GL accounts then?
No, see, you cannot limit the number of GL accounts you use. Always you have to use your GL accounts which are necessary to meet your legal requirement reporting. Right? There is no any limit and you cannot limit also. You can maintain any number of GL accounts. And these GL accounts always you have to maintain which are required to meet your legal reporting requirements.
So maximum in your experience, how many GL accounts you've seen?
Sorry?
In a multinational company, maximum GL accounts, how many you have seen so far?
Nearly around 2,700 plus.
Okay.
Yeah. So here, yeah. So we can create a GL account master record in two methods. I told you, no, in the general ledger accounting, you have to maintain the master record for each GL account. So that master record can be created in two methods. One is one-step method. Number two, two-step method. So first we will discuss what is there in one-step method and what is there in two-step method. Then we will see which method we use when. One-step method. Under this method, we maintain the data at the chart of account segment and the company code segment at a time. In both the segments, at a time, we can enter the data. That is called one-step method. And this one-step method is also called creation of GL account centrally. This one-step method is also called creation of GL account centrally. Now, we have the two-step method. In the two-step method, under this method, First, we maintain the data in the chart of account segment, then in the company code segment. Please remember, first we have to maintain the data in the chart of account segment. First, we have to maintain the data in the chart of account segment. Then only we can maintain the data in the company code segment. This is called two-step method. Generally, when you are configuring for one company code, we use one-step method. But when you are going to configure for several company codes and they are using same chart of accounts, it is always better to use, not better, we have to always use two-step method. It's not the question of betterment. When you are configuring for several company codes using the same chart of accounts, we have to use this two-step method. But you are going to configure for 5 company codes under the group, but all the 5 company codes are having their own chart of accounts. They are not using same chart of accounts. In that case, we use one-step method only. Clear? So first we will see how to maintain the master records for the GL accounts. This is the configuration material again in the general ledger accounting. Creation of GL master. See, let us start with creation of equity share capital account. I told you in the beginning of the class itself, I will be taking you throughout the total accounting process in SAP, GL, AP, AR, asset accounting. Then at the end of the FI, I will show you the very realistic P&L account and balance sheet. So let us start with the creation of some number of GL accounts. So let us start with the creation of equity share capital account. And every GL account is identified with a number, right? Then first of all, we have to decide which number we have to take to this GL master. See the material. Check up the list of account groups and identify the account group under which we have to create this GL master and choose the GL account number. Transaction code OBD4. In the transaction code OBD4, we have created your account groups, right? First, let us log in. So first let us go to the transaction code OBD4. In the OBD4 transaction code, we have created your account groups, right? So click on position, give your chart of accounts. Our chart of accounts 3366. So these are our account groups. Now we have to create the equity share capital account under one of the account groups. First we have to identify that account group. We have an account group share capital. So under the share capital, all the share capital related GL accounts are created. So equity share capital account is also to be created under the share capital account group. And for this account group, we have defined the number ranges 1 lakh to 1 lakh 99. So we can take any number between these two numbers. We can take either 1 lakh or 1 lakh 99 or 1 lakh 20, 1 lakh 50, any number you can take, but that number should be between these two numbers. And one number can be used only once. One number can be used only once. That's how the GL account number is taken from the GL account groups. If you go back to basic settings notes, if you go to the basic settings notes, at the time of explaining the account groups, right? See, the following are the functions of GL account groups. Number 1, to control the number to be allotted to general ledger master record created under the respective group. That is the first function of the account groups. It controls the number to be taken from the GL account. It controls the number to be taken for the GL account created under the respective group. So for the share capital account, you can take one number between these two numbers only. That is the first function. Second function, I will explain you at the end of the general ledger accounting. So we have to create the equity share capital account under share capital group. And this is the first account we are creating under this account group. So I want to start with 100,000 or 1 lakh. That's how every time we have to select a number like this. So let us keep this screen as it is. Now I want to open one more session. For that you can use /O. Otherwise this is called shortcut. Create a new session. So /O, click on generate button. Then it will take you to SAP Easy Access immediately, defaultly. And in order to create the GL account master record, we need to access one screen. For that screen, this is the path. And if you notice that the path is starting with the accounting. It is not starting with SPRO. Means what? It is the job of the end user. Creation of GL accounts is the end user job. But at the time of implementation, right, the FI consultant will create all the GL accounts in the client company by logging into his production system. Once the implementation is over, sometimes during any fiscal year, some more GL accounts are to be added based on the change in the reporting requirements. In that case, the end user himself can create the GL account. That's why the path is given from the accounting. That is SAP Easy Access. But the authorization to create a GL account master record is given to some higher level employee, like finance manager, senior finance manager, etc. It is not given. The authorization to create a GL account is not given to like junior accountant, cashier, like that. Okay. So path accounting means it is the part of your SAP Easy Access. See here, accounting. It is under SAP Easy Access. Please check the path. I think one of the folder is missing in the path. Please check the path. Accounting, financial accounting, general ledger, master records. I think now GL accounts is missing. General ledger, yes. After master records, you add GL accounts. After master records, you add GL accounts. Individual processing centrally, FS00. Centrally means this is one step method, right? So we can enter the data in both the segments at a time, right? GL account is equal to 100,000. Now you can write in the material. GL account is equal to 100,000. Company code 3366. Company code 3366. See the material carefully. Go to menu GL account create. Go to menu GL account create. This is called menu bar, right? Menu GL account create. Account, see, look at the screen please again. Control in the chart of accounts means this is the chart of account segment data. So this is the chart of account segment data. So account group is equal to share capital. Account group is equal to share capital. Select balanced account. Yes, sir, Mr. Anil boss. Yes, sir, Mr. Anil. See, I will tell you. You are absolutely right, Mr. Anil. See the question posted by Anil, right? My question is that if I need to create more than 2,000 GL accounts, it takes so much time, right? So much time. For reducing time, is there any option in SAP? Yes, we have one option. What is that option? I will tell you after creating the GL accounts. Okay, Anil. Now select balanced account. Select balanced account. Here in your material, see after account group, you have P&L statement account and balanced account, right? I told you to select balanced account. In that case, Against the balanced account, you put one tick mark. You put one tick mark like this. Tick mark is not there. You put one tick mark, okay? Then short text is equal share capital account. Short text is equal to share capital account. Within brackets, 20 characters. So in the share capital account, you can enter up to 20 characters. GL account long text is also share capital account. GL account long text is share capital account. Within brackets, 50 characters. Within brackets, 50 characters. Okay. Now, see the material, please. Go to Control Data tab. This is the Control Data tab. Account currency USD. Account currency USD. Look at the screen, everybody, please. No, Ronnie, I have sent it. Let me check after the class, Ronnie, right? So if I did not send you, I will send it again. Okay. I do remember that I have sent it to you because I created the group. So I am giving you the group mails. Okay, no problem. I'm sorry for the mistake, Ronnie. Again, I will send you today after the class. So account currency is equal to USD. See here, look at the screen, everybody. Account control in the company code means from now onwards, this is the company code segment data. So account currency we have given, actually I did not enter the account currency. When I come to Control Data tab, the account currency was automatically taken there. So the account currency is defaulted from the company code local currency. What is the company code local currency? The currency you defined at the time of creating company code is called company code local currency. So what is the significance of account currency in the GL account master record? If you see your notes, see the fields in the general ledger master record. Account currency. It is the currency in which the GL account is maintained. Then the account currency is automatically defaulted from the company code local currency. That's what I told you. Actually, I did not enter account currency USD. When you came to Control Data tab, it was automatically taken from the company code local currency. Then we can change the account currency if necessary. What is the necessity to change the account currency? Please remember, majority of the GL accounts are maintained in company code local currency only. But sometimes for some of the GL accounts, you have to maintain other account currency. For example, you have taken one term loan from HSBC Bank in Indian rupees. In that case, account currency will be automatically defaulted as USD. But you have taken the loan in Indian rupees, right? In that case, you have to remove USD and you have to enter INR. These are called foreign currency loans, right? But most of the GL accounts are maintained in company code local currency only. Then so we can change the account currency if necessary. If the account currency is company code local currency, then we can post the business transactions in any currency into that account. If the account currency is company code local currency, we can post the business transactions in any currency into that account. For example, for the share capital, the account currency is US dollar. In that case, we can post the receipt of share capital in any currency because there are some UK nationals who have contributed to your share capital in GBP. There are some Indian nationals who have contributed to your share capital in Indian rupees. Right? Then, like that, the people from different countries may purchase your shares, may subscribe to your share capital. In that case, you receive the share application money in the respective currencies. In that case, the receipt of the share application money can be posted in any currency. Then the system automatically converts that foreign currency transaction into company code local currency. But for that, we need to develop some settings. What are those settings? We will discuss later on in the general ledger accounting itself. Then, see, if the account currency is company code local currency, then we can push the business transactions in any currency into that account. If the account currency is other than company code local currency, that is foreign currency, then we can push the business transactions into that account in that currency only. Means what? For example, we have taken one term loan from HSBC Bank in Indian rupees. So you are creating the GL account for HSBC Bank term loan account. In that case, the account currency will be INR. Because you have taken the loan in Indian rupees, right? So account currency will be INR. In that case, you can push the business transactions into that GL account, HSBC term loan account, in that currency only. Means in that INR only. When the account currency is other than company code local currency, we can push the business transactions only in that currency. Means in our example, we can push the business transactions only in Indian rupees. Why? What is the logic behind this? Let us discuss. Here, you have taken the term loan in Indian rupees. In which currency you receive it? In Indian rupees. So, the term loan receipt is to be posted into the term loan. Then, what are the other transactions you have to post in the term loan account? Repayment. So, when you have taken the term loan in Indian rupees, you have to repay the term loan in Indian rupees only. Then, what is the other business transaction that is posted into the term loan account? Interest calculation. When you have taken the term loan in Indian rupees, you have to calculate interest on Indian rupees only, right? Tell me, where is the need to post any other business transaction in any other currency? When you have taken the loan in Indian rupees, you receive it in Indian rupees, you repay it in Indian rupees, you calculate in Indian rupees only. You calculate interest in Indian rupees only. Then where is the need to calculate and to post any other business transaction in other currencies in the term loan account? That's why when the company code local, that's why when the account currency is other than company code local currency, that is foreign currency, we can post the business transactions in that currency only. Now, my question is, we have 100 GL accounts. And these GL accounts are there like expense accounts, revenue accounts, balance sheet asset accounts, and the balance sheet liability accounts. We have 100 GL accounts like this. All the GL accounts are maintained in account currency, except HSBC term loan. And for this HSBC term loan, the account currency is INR. Then all other GL accounts are in US dollar. Now today, you are preparing balance sheet and P&L account. So, the balances of all other 99 GL accounts are displayed in the US dollar in your P&L account and balance sheet. But only this HSBC term loan account balance will be there in INR. Is it logical to display the HSBC term loan account balance in Indian rupees? Because you have to prepare your company code local currency balance sheet and P&L account, right? You are doing business in US and you are registered under US Companies Act. So you have to prepare your P&L account and balance sheet in US dollar. But the account balance in the HSBC term loan is there in INR. It will not allow you. Nobody will allow you to show only the balance in HSBC term loan account in INRs. So the balance, the closing balance of the HSBC term loan in Indian rupees is also to be converted into US dollar. For that, system automatically converts. But we need to do some settings to enable the system to convert automatically this terminal account balance into US dollar, we have to do some settings. There is one concept which is called revaluation of foreign currency loans. According to International Accounting Standard number 11, it is mandatory. According to International Accounting Standard number 11, it is mandatory. Please remember, it is mandatory to revaluate the foreign currency loan balances. Then we have to recognize the profit or loss that may arise due to the fluctuations of in exchange rates. It is mandatory at the end of every year, but periodically every month it's optional, but at the end of the year it is mandatory to revaluate the closing balances in the foreign currency loans, because we may be gaining or you may be losing due to the fluctuations in the foreign currency rates. That loss and gain is to be recognized into your books of accounts. This is called revaluation of foreign currency loans. For that purpose, we need to develop some settings. Because of those settings, at the time of transferring the GL account balances to balance sheet and P&L account, the system automatically converts this foreign currency loan balances into company code local currency. See how much is there behind one field. This is what you have to understand importantly from the entry point of view and from your implementation point of view. It's not just giving the account currency USD or INR like that. Now, so that is the concept of account currency. Then come back to material, please. Select only balances in local currency. Select only balances in local currency. See, I have given again in the notes. If this checkbox is selected, the system displays the balances in the company code local currency only. For this purpose, if any foreign currency business transactions are posted, the system will convert these foreign currency business transactions into company code local currency. For this, we require some settings. I told you, when some of the UK nationals have contributed to your share capital, that the transaction is posted in GBP. But that GBP transaction has to be converted into company code local currency. That is possible if you select only balances in local currency. System automatically converts the foreign currency business transaction into company code local currency. But of course, for this we need some settings. Then come back to material again. Select line item display. Select line item display. This is the line item display checkbox. These are called checkboxes. See, what is the impact of selecting line item display? By selecting this checkbox, the system displays the line items in the GL account. That is, it maintains the details of the business transactions posted. Means, suppose if you take a rent account, right? If you don't select this line item display, if you select this line item display, the system will display the details of the postings like this. That is called line item display. If you don't select this indicator, then the system will not show you the details of the postings. It will show only one line with accumulated amount. Means